ghost in my ledger, humming old chain tunes. Used to drink champagne on the blockchain moon. Had my boots up on that digital gold till the bull turned bear and the market got cold. Binance called collect, said son, you're done. They took my farm, my coins, my fun. Now I'm sitting in a shower crying with Matt, steam in my eyes, but the chart's still flat. There's something in the way this candle bleeds, like whiskey dreams and margin needs. I should've hold tight where it's safe and still, but I rolled that 100X down the hill. Now my cold wallet's colder than the moonlight dew. Lord, I've got the cold wallet blues. I once saw God in a green tick climb, said by the dip, son, it's your time. But the dip kept dipping till it felt like sin. Every prayer I sent was a liquidation pen. Now my Lambo's just a rusted wish. My keys are lost like a catfish kiss, and the blockchain choir won't sing my song, cause the trend broke down and the faith is gone. They say don't trust, verify, but I just prayed. My cowboy heart got margin played. Now the tumbleweeds roll through my old chat threads, and the bull I love's been long since bled. There's something in the way this candle bleeds, like whiskey dreams and margin needs. I should've hold tight where it's safe and still, but I rolled that 100X down the hill. Now my cold wallet's colder than a banker's truth. Yeah, I've got the cold wallet blues. Cold wallet blues. Got them cold wallet blues. Yeah.
Oh, brother, oh, brother, oh, brother. Welcome. Whoa, what the fuck?
Welcome back to another episode of the Matt Kohrs Show, where I am Fat Barney, your favorite host. Welcome to the Thunderdome. It looks as if the equities, the crypto, and the commodities market is taking a little bit of heat this morning, and the answer as to why that is happening is because the AI hype cycle is taking a little bit of a stumble. Is it over? Probably not. But in the short term, for the people swinging from yesterday to today, Palantir had good earnings, but they weren't good enough to keep all of the hype going. And as we've been covering over the past week, when there's too many people loaded onto the boat of the bulls, when they're in the bullish camp, when they're YOLOing into short-term degenerate calls, and it works and works and works and works until it doesn't, well, you have all these people overpaying for something that they probably shouldn't be overpaying for. And then when we just don't have that, the perfect play out, this is what you get early in the morning. So if you're looking at pre-market trading right now and you're thinking to yourself, Matt, what is the bad news? What in the world is going on that the market is getting hit right now? There's not really bad news. We just didn't have good enough news to keep the cycle going, the hype FOMO cycle, because right now things were just way too elevated, and it works and works and works until you get a little bit of a misstep. And then when it comes undone rapidly because of not only the amount of contracts in the derivatives market related to options, but just the absolute leverage of it. So this is more of a options market phenomena, how popular it is, the structure of it, and the fact that there was just not much support beneath. So do I have bad news to report to you? No, I do not have bad news to report to you. It's just the fact that we had lack of phenomenal news. I would actually argue the news we got out of Palantir was actually good. It beat on top and bottom lines. They increased their forward-looking guidance. Like, the news was quote-unquote good in a vacuum from a fundamental perspective. But we're now getting into the nuances of sometimes the fundamental news and breakdown can differ from what the market's going to do due to really the option setup. So I'm going to be breaking that all down today. We have some other news, larger political news. It is election day. Folks, vote. I don't give a fuck who you vote for. I just think, hey, do yourself a favor. Do at least 10 minutes of research. Look a little bit into it, and then go out and vote today. And if you're like me, there's a good chance that they sell baked goods at the place that you vote. So buy some baked goods. Honestly, if I'm going to be like 100% with all of you, most of the reason of why I vote is to go out and buy baked goods. I love the baked goods that get sold, and this has been instilled from me ever since I was a youth, and my parents brought me to vote. They got to vote for president and governor and mayor, while I got to pick out the baked goods, and I've done that ever since I was a wee little toddler, and I do it now as an adult, and that's the main reason I think we should all vote. And if you guys don't have the opportunity to buy baked goods at the place that you vote, well, maybe you should consider moving and find a place that also sells baked goods. So go vote, do that. Voting clearly doesn't do anything. I'm going to disagree on that one because it kind of puts the people in office, unless you're like one of those like Russia's meddling and the votes are fake, like one of those kind of people. But you should vote, make your voice be heard for sure. So it's Turn Down Tuesday. It is November the 4th, which means it's an election day. So go out and vote. We have some crazy news. Dick Cheney passed away. So we're going to be chit-chatting about that. We're going to talk about maybe the fact that we might not be getting a rate cut in December. That's part of the reason why the market's becoming undone this morning. So we're going to get into that. We're going to talk about earnings. We're going to talk about the hottest deal from Apex. They are the stream partner pinned to the top of chat in the description of the video. Apex is doing a 70% off deal, which I know isn't their best ever. We've heard of 80 and we've heard of 90, but what's crazy is the upgrade fee when you pass the test is dirt cheap right now. In fact, it's the best deal they've ever run for the upgrade fee from your eval to your performance. So we're going to be talking about that. And before you buy that account, you guys deserve it because you're here early today. So maybe I should tell you. I was going to tell you I'm not going to tell you the giveaway today, but I will, because you guys are early and you deserve a specialty thing. So yeah, why not? The early bird gets the worm. I was going to be that guy holding it off for the larger audience, but no. Right here, 70% off evals with code Goonie. The first 5 people who DM me proof that they bought an account today, I will give you a code for another account. So basically, I'm giving you a freebie account. All you have to do is DM me on Twitter, and I'm going to go in normal chronological order. But the first 5 people who DM me proof that they bought an account today with code Goonie, I will be giving you another account. And I was going to hold that off for market open, but then, no, you guys deserve it. You guys deserve the specialty thing. Because you're here early. You're here on time. So why would I wait? No, I'm happy I'm making this decision right now. Executive decision. I didn't even talk to the boss man about it. We're ripping it right now. The first 5 people who DM me proof on Twitter, and once again, if you just need my account, just send me a screenshot or whatever at Matt_Kohrs. The first 5 people, I'll have the timestamps of it. I'll do it right after the show today. I will be sending you all a code for another one. So you're going to be getting basically an even better discount because you're going to be getting 2 accounts. One of them is going to be free. And then, of course, in the, positive scenario that you pass both of these tests, the upgrade fee is going to be dirt cheap right here. You can see this crazy deal. 70% off and $40 lifetime PA fees. Before this, they were $140, as in there was a 1 in front of this. Then they dropped it to $85. And right now, like I said, you can even see it from Apex. Yes, only $40. So check that out. Like I said, this is the cheapest they've ever done the performance account fees ever. So check that out. And obviously to celebrate a little bit, I reached out to the company and I said, hey, I want to buy some of these coupon codes to give away to the community. They said, great. How many? I said, give me 5. So we're going to be giving away 5. This deal does last for a day and a half. So the first 5 of you who show me proof, screenshot it, send it to me on Twitter. Just DM me, Matt_Kohrs. I will be following up today, giving you another code for a whole nother account, another eval account. So check that out. All right, here's a look at the market, which is not doing so good this morning. The SPY is currently down 1.15%. The Nasdaq is down 1.6. The Russell's down 1.5, and Bitcoin is down 2.5. There is a lot of blood in the streets this morning, and we're going to be getting into why. The S&P 500 futures slipped 1% on Palantir decline, rising concerns about AI stock valuations. I want to be explicitly clear here because a lot of you yelled at me in the Palantir video yesterday. I want to be clear. The top and bottom lines were a beat. They increased their forward-looking guidance. From a fundamental perspective, Palantir, ticker symbol PLTR, did well. The issue is right now, to keep this hype FOMO going, you can't just do well, you have to do phenomenal. And all of a sudden, even though it beat, it didn't beat enough to keep the hype train going. And when all of a sudden people are like, well, if that didn't do well, does this mean the entire AI thing right now is about to take a breather? And when you put that together with the fact that we have downside gap fills, actually, now we're going to have an upside gap fill. This whole situation is going to get confusing because if you look at pre-market trading, we are scheduled to open around 6776, which is right around where my cursor is. So that means we're actually going to have an upside gap fill, and I should change this here. Let me make it green. I think it's going to be, can I do that? Crossing up. Okay. And then I want to make it green so you guys, we're all color coded here. So when the market opens today, it's going to be a tough situation because we are roughly where my cursor is right here, right around here. We're going to have an upside gap fill to 6820, and we're going to have a downside gap fill to 6750. So which way is it going to break? Well, your guess is as good as mine. And actually, we're going to have a similar situation here in the NASDAQ. Hang on, let me edit, crossing up, save, and then we're also going to be making it green. NDX, you're going to have an upside gap fill to 25,888 and then a downside gap fill all the way down to 25,126. So the S&P 500 and the NASDAQ, because of their relative weakness this morning, super awkward situation of based on if we open right here, upside gap fill and a downside gap fill. Very important to note. And I guess since we're just talking about it, just for you guys to be able to map some of these things out, we also have a slight upside gap fill in the Russell IWM, the ETF tracking it up to yesterday's low at 242.49. So about 50-60 cents above where we are right now. And then just because, hey, we're talking about the blood in the streets right now, Bitcoin looking uniquely weak. If I zoom out, you can see we have clear support at 98,000. There's a key technical psychological level at 100,000. But across the board, yes, there is a bit of, we'll say, bearishness in the short term this morning. Dick Cheney, driver of the militant U.S. response to 9/11, dies at 84. Not really going to be impactful to the market today or the economy in general, but it feels like it's big, large political news, so I wanted to cover it with you. But yes, Dick Cheney did pass away. Also on the political front, as I've already alluded to, it is election day, and I, here in New York City, do find it uniquely interesting that New York City, which is the epitome of capitalism, is about to elect a socialist. Does anyone else find that interesting of how it's like literally just the polar opposite of the representation of the city? And when I say we're about to, the odds are extraordinarily high. Zoran right now has a 90% chance. A 90% chance of winning. So Andrew Cuomo coming in as an independent at 10%. He's not going to win. If he did, it would be one of the largest upsets ever. But right here, Zoran, we are about to, like I said, elect a legit, like straight out of the box socialist in the, like I said, the actual representation of capitalism. So it's election day wherever you are. Obviously, this one particularly matters to me, but wherever you are, make sure you vote today. U.S. to pay partial SNAP benefits for November during shutdown. The government warns that payments under food assistance programs could be delayed in some states. Please do not forget that the government still shut down. We are seeing a big shift in maybe we're opening up. I just wanted to show you what's happening in the past week here. Actually, in the past day, we are seeing the odds of a government shutdown coming to a conclusion kind of spike. And you could actually really see it here. Check out in the last day. We were expecting 49 days, recently dropped 5 days. Little bit of political movement there. So I want to call that out. But remember, with all of it, yes, there are people we know in our lives, probably more than you would suspect, that are going to be directly impacted by this. So whether it's food assistance programs, whether it's what's going on in the travel industry and the airline traffic controllers, whatever the hell they're called, or whether it's us here trading, we're not getting the economic reports. So across the board, obviously some more serious than others, there's a lot of impact from this. But recently I did want to let you know that from about 7:20 this morning till now, there's been a clear shift in odds, maybe suggesting that both parties are going to come to the table and figure out some sort of solution. Trump's tariffs rate rides on Supreme Court justices he picked. Remember, this is the month where we find out if Trump's retaliatory tariffs are illegal or not. It will be ruled on by the Supreme Court. It's at least going to start this month. I don't know necessarily. I'm not the most familiar with the process of it, but it's going to at least get started. So once again, it's not the tariffs in a general sense. It's more of the retaliatory tariffs. Is that power given to the executive branch? That's what we're going to be finding out from the Supreme Court. So please pay attention to that. Fed Governor Lisa Cook, in first policy speech since Trump's suit, says she is undecided on the December rate cut. So this is echoing what the chair, Jerome Powell, recently said at the last FOMC meeting, where what we have coming up in December. Remember, there is no FOMC meeting in the month of November. The next one is in December. I want to be very clear about that. But echoing what Chair Powell recently said in the October meeting, that December is not a foregone conclusion. As we heard it time and time again, and actually the second he said it was 5 minutes into his speech, we all watched the market just take a 1 minute gap down and keep selling and selling and selling. All of a sudden, the market was like, whoa, we were betting on this. We were betting on like pretty much the definitive outcome of a 25 bips rate cut. And the market didn't like what he had to say. And then Lisa Cook, who is a voting FOMC member, is basically now saying the same thing of, hey, we're going to wait for the data to come in. If the government opens back up, we're going to have more data to go off of. And if the data does suggest a rate cut, great, we're going to do it. But obviously, there's the economic monetary policy, like the nerdy PhD thing of like, okay, what are we measuring? What are we not measuring? And then on the other side, things are just becoming super political. And that's obviously no surprise to any of you listening to this or to any of you paying attention to the world, even with like a modicum of effort. But right here, we're at that point where like, okay, it's getting even like it's getting ratcheted up to the next level, if you will. So when this was happening, and I do want to remind you, yesterday and really for the remainder of the week, every single day we have Fed speakers. So stuff like this could happen all the time. We are seeing a slight shift in the odds of a rate cut. Now, to be clear, it is still the most likely scenario that we do get a 25 bips rate cut. But I just want to show you and remind you that what happened in the meeting going into Jerome Powell's speech on the day of the last rate cut in October, there was an 85% chance of a 25 bips rate cut. As soon as he started talking, it went down to 65. And now that, once again, we are seeing some of the other Fed members echo the same commentary, it's now sitting at 67. So we're in this situation where the likelihood of it dropped, once again, I'm referring to the 25 bips rate cut in December, the likelihood of it dropped, but it is still the most likely outcome. So right here, basically people were too overly confident in this being the situation. And now we're sitting here, and obviously the election today is probably going to have quite a bit of an impact on the political composition of what's going on in the government. But as of now, still likely. As of now, the government shutdown is still going, but it should be done by mid-November, and it's going to have an impact today. We were supposed to get the JOLTS job openings, and unless something crazy happens in the next 40 minutes, we're not. This is another BLS report, but tomorrow we should still be getting the services PMI and prices. I want to call that out. Initial jobless claims, it is scheduled for Thursday. Most likely not going to happen. Surprise, surprise, because of the government shutdown. So even though we're not getting a lot of the data that we rely on to trade and the Fed relies on to make monetary policy decisions, we are still getting earnings. So the star of the show was last night, Palantir, ticker symbol PLTR. We're going to be getting into that. But of course, early this morning, Uber, Shopify, Spotify, Pfizer, Hut 8. After the market closes today, I know many of you in chat care about AMD and Supermicro. AMD and Supermicro, please pay attention to those. AMD, Supermicro, after the market closes today. Tomorrow, McDonald's, Robinhood, IONQ. You're going to even have Qualcomm, ARM, and Snapchat. Those are going to be some big ones. And then Thursday morning, D-Wave, for those of you paying attention to the quantum name. So feel free to screenshot this, but more exciting or more useful, not really exciting unless you had puts. Palantir tops estimates, boosts fourth quarter guidance on AI adoption. That sounds good. It beat on revenue. It beat on EPS. It increased its forward-looking guidance across the board. PLTR was a beat. You are hearing me properly. But yet, in pre-market trading, we are down 8%. 8%, even though it beat. And this is where I need to remind you that sometimes in the market, we don't live in this vacuum of a beat or not, meaning the stock go up or down. There's a lot of retail traders, especially early in your career, that you make that assumption, and for good reason. It just sounds like that's how the world should work. If you beat, you go up. If you miss, you go down. But this is that brutal reminder that that's not how it goes. In the world of trading, especially when you're trying to play earnings, not only are you trying to anticipate that something beat or miss, but then on top of that, you're trying to anticipate, does the market react in that way? So it's two different 50-50 bets, which is most of the reason of why I absolutely hate playing earnings, because it's not just 50-50, it's 50-50 on top of 50-50. I know it sounds crazy and I'm there with you, but once you kind of see how this has been playing out, you're going to realize that this happens commonly, and it also happens the other way. There are times where a company completely fumbles it, completely misses, and then yet it goes up because of one thing that maybe the board said in their earnings call or something like that. So yes, if you were bullish on Palantir, if you had a short-term bullish bet from yesterday to this morning, my heart goes out to you. It is frustrating. You picked earnings right. However, you didn't pick the market's reaction properly. And what the market's reaction is, well, it's a little bit this. The boat was too loaded up. So where we closed out yesterday, this is 207. This is the volatility skew once again for PLTR. You can see how things are pretty elevated to the call side and to the put side. So if anything, you're actually experiencing vol crush. Going into this event, the expected move was just under 9%. And even at the most extreme right here, we're only down 8, as in it did not move what the options market thought it was going to move. And I'm not even talking bullish or bearish, but you're seeing extreme vol crush, and more so on the call side. Look at this skew over here. Basically, all these people who YOLO'd into calls, well, obviously, even if we did well, and at first it did, this still was not hitting the percentage move. So even if we stayed green, those call buyers were going to get crushed. Even if we were staying green, because we simply did not move what the implied move was. And now, obviously, people are realizing that. So in pre-market trading, they're kind of getting it out of their calls. That's dropping the delta. And then it becomes a game of hot potato, and no one wants to be the last one holding it. So just wanted to cover what's going on with Palantir. And then when you, I guess, understand what this symbolically means for the AI hype trade, and then when you tie that together with the recent Fed commentary, basically being along the lines of, we don't know what we're going to do in December. That's exactly that setup of uncertainty and unease that leads to these types of sell-offs. And all of a sudden, when you pair that together with understanding the structure of the options market, well, that's where the sizing of the sell-off makes a bit more sense. So I'll be the first to admit, okay, the news that we got across the board, yeah, maybe we should be neutral, a little bearish, but the sell-off in post-market trading is even more extreme. And the reason for that is because of the option setup going into market close yesterday. I do want to quickly cover some of the other earnings. Pfizer tops estimates, raises profit guidance, even as sales fall. So Pfizer right there, there's some news. Uber falls 8% despite third quarter revenue beat, kind of going the way of Palantir, even though it beat, not doing so well. And then even though it didn't have earnings, I know a lot of you were all jacked up on Tesla, ticker symbol TSLA yesterday. Got some news there. Norway's mega wealth fund to reject Elon Musk's $1 trillion Tesla pay package. Not so good. This is going to cause a little bit of unease. And even though Tesla's holding up better than the rest of the market this morning, depending on how the market really reacts to this, because remember, we've seen it in the past where the market really likes where it's like, okay, cool, Elon's going to stay. He's getting the pay package he wants. Great, let's keep going. If this starts to really take hold, for lack of a better term, if this takes hold here, you might see some downward pressure on Tesla. So right now, I just want to call it out. I currently don't have an active trade on Tesla, just trying to be transparent, but I do have it in my long-term investment account. So just wanted to let you know what's going on with Tesla. If you haven't already, sign up for the newsletter, mattkohrs.locals.com. My mod will drop it in chat. It's also in the description of the video. Every single Sunday, this will come to your email. It is free, FREE. You are going to be getting a breakdown of the market, cheat sheet of earnings. I try to highlight the ones that I think you're going to care most about. Then I give you all the major macroeconomic events. I'll be the first to admit that recently this has been a bit weak because of the market being closed. But right here, see how it says maybe? Well, we're not getting JOLTS job openings because the market is closed. So just want to let you know that. But remember, with respect to seasonality, this is the single most bullish week of the entire year. Just because it's historically been bullish over the past 3 years, 5 years, and 20 years, all of those time frames, this is the most bullish week. That is not a guarantee. That doesn't mean it's been a bullish week every single year. It just means in aggregate, it's an absurdly bullish week if you were to take this particular trade. So once again, today, the bulls have won this day 2 out of 3 times over the past 25 years worth of information. As in, a lot of the time, they have a 14% edge, but that doesn't necessarily mean that they win it every single year. Just because something favors the bulls or bears does not mean it's a guarantee. It just means it's more statistically likely. So anyway, this is the look at the hypothetical equity curve you would have if you bought it open, sold at close on this individual day. Obviously, the bulls win, and that's true for the remainder of the week. They win on Wednesday. They win on Thursday. Actually, Thursday is absurd. It's absolutely insane how bullish individually Thursday, November the 6th is, and then obviously Friday as well. So every single trading day of this week from a seasonal perspective does favor the bulls. Is that a guarantee? No, but I just want to let you know the idea of the headwinds and the tailwinds that the two camps are currently dealing with. Of course, when the market gets going, I will be showing you the options flow. Let me get this ready on the day. Here's the Mag 7. Yesterday, we popped, we dropped, went flat into close. The S&P 500, similar situation. We dropped, we popped, we went flat into close. I do want to point out how a lot of the positive gamma we've had from May up until recently is now different. Every single day when I show you guys the option structure, it was always the situation of positive gamma everywhere above and below price, or at minimum, positive gamma below, negative gamma above. So whenever we sold off, the market makers were then natural buyers and they caused mean reversion back to the upside. Now we have this weird distribution where I covered this yesterday, where we have a lot of positive gamma up here at 6,950, but we also have positive gamma here at 6,700. We're in this weird kind of gully situation. And the question here is, which way does it break? Now, if you ask me from a stats perspective, I would say 50-50. But when I look at just the general concepts of, well, how high are we? And okay, now we have downside gap fills. Maybe it does make more sense in terms of mean reversion. Maybe we visit this mountain peak before we visit this mountain peak. I also want to let you know that this is dynamic. This situation changes every single day, but overall, the gamma structure we have and what we're kind of dealing with is very, very different than what we had on this entire pump. Basically starting in early May, mid-May, all the way up until recently, it's been an absurd amount of positive gamma, especially beneath price. Every single monthly OPEX, we've just had a refill and a refill and a refill and a refill of this positive gamma. Now, this time around, of course, it could happen again when we get to the November monthly. Things could expire, people could reposition, and they could load up for the Santa Claus rally. That is 100% possible. But for me to personally take that play, and remember, I am not your mom, I'm not going to tell you what to do, but for me to personally take that play, well, first, I'd feel much more comfortable on SPX and NDX if we fill up all these downside gap fills, because not only am I getting in at a cheaper price, but then I don't have to worry about people who really might become a self-fulfilling prophecy to get those downside gap fills. So I would love to do it. I am not anti-bull here. But for me to be bullish, to ride that Santa Claus rally, I'd be much more confident in it with the downside gap fill. And obviously, everyone in the Discord already knows, but I'm playing the downside gap fill right now in the S&P 500, the NASDAQ, the Russell, and I'm long on vol. So I guess technically, just to be clear, the Russell does not have a downside gap fill, but I'm just playing this downward movement. I wanted to play to the 50 EMA. So we're going to see how that all plays out. So that's pretty much the setup on the day to let you guys know. I've not broken my rules. Here's all my accounts. Here's my 5 take profit accounts. These are currently all evals. And then I have 20 different funded accounts on Apex. They are all looking pretty good. 5 of them are up 1.5K. 15 of them are up about $15,000. And then I have a funded futures network as well. And that's where we're kind of doing that Orbo trade. So lots going on. And on that particular note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all, play responsibly, and if not, have fun. Remember, it's just money. You can't take it with you when you go. So we're in a weird situation of a lot of these having, well, the SPY, the Russell, and the NASDAQ all have upside gap fills. I want to be clear about that. But the SPY and the NASDAQ also have downside gap fills. So that is something clearly that should be considered. And holy shit. Look at that open. A $47,000 gain. That is disgusting. $46,000. That is absolutely crazy. So yeah, was I playing this? Yeah. And I guess I kind of let everyone know about it as well. I wasn't hiding it from everyone. I showed it to you guys on stream. I explained it in the update videos. It's in the Discord. I mean, and it all comes back to just options positioning. Time and time again, especially with just the prolific popularity of options trading right now, folks, it's where we're at. If you're trying to be an active trader, a swing trader, a day trader, you need to put in the effort. And I know it can seem daunting at first, but I'm telling you, the effort is clearly worth it, because right now we are in a new regime of trading where everything is dictated by the options market. It is all clearly dictated by the options market. And that's exactly day in and day out how we call out these types of levels. Here, I'll go to the 1 minute just so you can see what's going on with SPX. We do have an upside gap fill on SPX all the way to 6821. It is right up here. I know there's not much going on my screen right now. That's just because of this large gap down, but the upside gap fill is 6820. What I care about today as a trader is 6,800. If the bulls can hold above this, okay, cool. The longer picture is still intact, and I think everything's pretty good. But the longer we do not recapture 6,800, once again, the longer we do not make this 25-point bounce, this 0.3%, 0.34% bounce, the longer we hang out below this, that makes the market susceptible to a drop all the way down to 6,715. Obviously, there might be stops along the way here. Where are we currently at? Yeah, you have to watch 6770. You have to watch 6750. But right here, I'm looking at this giant positive gamma node, 6715. If you are paying attention to the overall market, if you're actively trading today, you have to mark that out. It is the biggest positive gamma node to the south side, and then obviously to the north side. This is why I'm watching 6,800. So to me, this is like the clear range I care about today. If the bulls can push and hold above 6,800, okay, interesting. Things could get a little bit better. They can improve. If we don't recapture that, if we get rejected, I'm watching 6750 as a intraday target, but really my eyes are all the way down here at 6715, the big positive gamma node. And how are we looking in pre-market? Not so good. Bitcoin breaking down. We have vol spiking. Vol is over here, 19. Hang on, I should put a vol breakout. Well, we already got the breakout. All right, let me get alerts on vol. I'm either looking for the push below 19 or above 20.5. So let's continue to watch volatility. But things are picking up. They are picking up. They are picking up. They are picking up. Wow. What a freaking day we are having. 5 minute is bearish. 10 minute is bearish. 30 minute is bearish. And even now the 4 hour is starting to break down. That should be a little bit concerning. It is not often that the 4 hour chart recently, ever since May, has been on the bearish side of things. 5 minute, 10 minute, 30 minute, everything's bearish. 5, 10, 30, and 4 hour on the S&P 500 and on the NASDAQ are all bearish. There is a downside gap fill on NQ here. I want to call this out for anyone trading Apex or whatnot to 25,566. It is this high. Actually, no, that's not even the right mark. Shoot. Where did this close at? 510. It's all the way down to 510. Wow. All right, folks, buckle up, Buttercup, because we might be in for quite a ride today. I'm feeling good. I'm up about 52,000. So making some of this money back. You know, this is what happens when you get on the right side of vol. When you can catch the trend and vol expands, those are your big money making opportunities. All right, now that the market's open, I do want to remind you right now, Apex is running a crazy deal, 70% off with that code Goonie. But on top of it, the upgrade fee from eval to performance once you pass is only $40. Before, this was $140. Then they dropped it to $85. Now it's only $40, which means that this is basically tied with like the best all-in price you can possibly get by the time you do the 70% off, or it's just a $70 reset plus that $40. That means you're all in for $110, once again tied with some of their best offerings. And to celebrate it, not only do you have a day and 15 hours left, the first 5 people who DM me proof that they bought an Apex account today with that code Goonie, I will be giving you another account. So the people who are fastest listening right now, pinned to the top of chat in the description of the video, just DM me proof on Twitter. Just DM me proof. Only 2 of you have DM me, which means there's at least 3 left for you guys to keep going if you so choose. So I just want to call that out for everyone that the first 5 people, I'm just going to look at the timestamps of who sent me the screenshots first. I will be giving you a code today for another account. So saving you even more money, or really just increasing your opportunities here. All right. Where are we at? Okay, we're at this first level, 6,770. If this holds, great. Maybe we bounce, maybe we hit 6,800. If it does not hold, I'm looking for 6,750. Obviously, vol is expanding. We are at 19. Oh, volatility. Palantir is breaking down. Oh, wow. Well, it got its downside gap fill. There's another downside gap fill, but now obviously there's an upside gap fill. So Palantir down 9.8%. Tesla getting hit. Obviously, the market not the biggest fan of what the Norwegian sovereign wealth fund is doing. We're even having a breakdown here, potential double top on NVIDIA. Microsoft is right at the support zone. Watch 507. Obviously, natural target past that is 500. Apple actually holding up somewhat decently, pretty much break even on the day. Amazon giving a little bit back from its all-time high. Meta not looking good. I mean, how big of a drop is this? How the mighty have fallen down 20%. AMD actually holding up somewhat well. Avago holding up decently. Hood getting hit. SoFi getting hit. Oracle going for its downside gap fill to 243. CoreWeave getting hit. Oklo really getting hit, putting in a lower high. And I believe Hut 8 down 16.5%. That's getting hit, potential double top. Open is probably on the verge of breaking down. And then we see quantum computing, as I called out yesterday. It's unfortunately, it's going to end up looking like a pump and dump. I'm not trying to say it's a pump and dump in terms of people actively pumping it, but it's a FOMO wave that doesn't have enough behind it. And that's why it's getting hit basically 6.7%, 5.3%, 5.2%. Even Iron, after it's hitting its high, it's getting hit. MicroStrategy is vomiting. BITNX is down 7%. Dude, things are getting goosed this morning. Wow. SoFi isn't tech. It's getting hit. Yeah, I mean, the Russell's down. Everything's down. You're seeing like just the equities market get hit right now in a general sense. I bet we have a lot of people unloading calls. Remember, people were just way too loaded into calls, and we're probably seeing those calls getting sold, which is going to drop the delta. It's going to drop the delta. I think I missed a trade. Who? I don't mind this short right here. Hang on, let me make this a little bit bigger. Right here, it popped up, failed, green. I don't mind this short at 96. I'm not in love with the fact that it's like that close to $100 value, because a lot of people like to retest that. How are we going here? Do I want to take a quick stab at it? Let's see if I could pull off today a nice one and done trade. Let's see. Come on. Bring it to me. Let's see if we can make today a one and done type of day. Well, it was looking good for a second there. Now it's not looking so good. Shit, it's about to tag me. Oh, the sad thing is this is probably going to work out beautifully, but I just can't take on that risk of if it pops just because the vol's so high. I probably could have put my risk up here, but I just wasn't willing to take that risk on. Maybe if I had one contract, I could have done it. The sad thing is that trade's probably going to end up paying well, but I don't want to have a repeat of what I ended up doing on Friday, where I felt like I was in the right trade, but I had to withstand a lot of heat in the middle. So just not necessarily worth it for me. So today's volatility is going to be high. The ranges are going to be high. I have no worries that more opportunity is going to present itself. I like that. I waited for a bounce. It started to fail, and it just ended up being a higher low, but I'm not in control of that. I'm not in control of that. That is outside of my particular domain. So I will just be patient, and I'll wait for the next one. Whoa. I'll wait for it. I definitely do not need a repeat. And even right here, this is why exactly I was willing to get out, because if it does want to do something such as, oh, let's retest VWAP all the way up here, well, that's a good 100 points. Like, we're moving a lot of distance very, very, very quickly. So just on this off chance, I try to play this. It was a lower high. I thought it was a good stab at it. We could have easily reverted to the intraday low. I would have been done on the day, would have made that money, but you're never in control of the next bar. It ended up being a higher low, went against me. And as soon as it proved to be a higher low, I got out of the position. So I actually like that trade. I don't like it in terms of, it made me so much money. Obviously, I lost money on it. But in terms of the decision-making that went into it and the risk management, it just didn't break my way. We are finding support at this key level. This is right where I went short. I was trying to play the failed bounce, which ended up right here. You could see it. Actually, this explains it pretty well. So took a stab at it, lower high, try to play the breakdown, try to play this failure at the key level. My risk was the recent high. I like the trade. Honestly, I would take it again. If I'm being completely honest. It just didn't work out this time. And actually, oddly enough, 2 minutes after I get in is right when we see this gigantic pump, this huge fucking pump. That's crazy. All right, we're going to see. We're going to see what the 6,800 level really has in store for us. 41. So everything catching a bid about 10 minutes into the day. Even Bitcoin's catching a bid. So let's see. The bulls are putting up a little bit of a fight right now. The question is, how much of a fight? How much of a fight? The Mag 7 got a little bit of a pop. It's kind of flattening out with price here. S&P 500 definitely getting a pop. So it dropped for about the first 6 minutes, went flat, and then right here, 10 minutes into the day, getting a pop. People are closing out puts. They're not touching calls. I want to clarify, this pop in the market right now is not bulls chasing it to the upside. It is people locking in their bearish profits. I want to be very, very clear about that. Based on the current set of data, this is not people entering into new bullish bets. No way, Jose. This is people locking in their bearish profits. Oh, fuck. Well, that just gave back about $7,000 right here in this Russell. I wasn't paying attention. I should have gotten out. Okay, I need to be smart here. How could I be smart? How can we not do something stupid? Apple's actually going green. All right, we're catching it. There's a little bit of follow through here. 5 minute is on the bullish side. 10 minute testing. 30 minutes bearish. 4 hours bearish. 5 minute is now on the bullish side. 10 minute is testing. 30 minutes bearish. 4 hours bearish. Basically, it's does this pump last? I suspect that the market very much wants to reevaluate 6,800. That actually was a nice trade. If you took this breakout trade at 941, that's where my risk got hit. Yes, I could have flipped it, but I didn't necessarily want to be going against momentum. My risk would have been the recent low, which was probably a bit too far away, especially considering the fact that I was locking in a loss. But if this was your first trade of the day, taking this long, risking the recent low, whether you wanted 935, 938, or even 940, that breakout long was a good opportunity just because the risk reward was in your favor. And then you also fortunately caught the upswing in Delta. But once again, this upswing in Delta is they're not buying calls. They are getting out of puts. They are selling puts. That is a very different thing than buying calls. I know price looks like it's pumping, and if you want to chase it to the upside, obviously, whatever, Godspeed. That's you. That's your prerogative. But just be careful with the downside risk, because all of a sudden, if people decide to sell calls, if they decide to buy more puts, well, this entire pump is going to get undone, and it's going to come undone rather quickly. So right now, we are on shaky ground. We are on shaky ground. And we just got a flow alert at the top there. Yep, people are starting to sell calls here. Oh, did we hit VWAP? Oh, it was almost a perfect VWAP test at 82. It was almost a perfect VWAP test. I'm watching this very, very closely. We got this white dash line is the volume weighted average price. That was a natural target. So like I said, this was a nice breakout long. You could have been, I mean, damn, that was 70 points. We're moving a lot today. We're really, really moving today. What is that risk? 83. What time is it? It's 9:46. Oh, brother. Oh, brother. Oh, brother. Oh, brother. All right. Are we going to get a VWAP failure, you think? Calls were cheap? Not necessarily. I'm watching this. We're breaking this trend line. We have a lower high. Oh, how much risk? This is all a game of risk reward. I think this comes undone today. It's just a question of when, and can you take advantage of it with minimal risk? Can you take advantage of it with minimal risk? All right, let's look at the flow. The flow has kind of stopped. Mag 7, it's flattening out. Okay, we're taking a second stab at it. We're playing the VWAP rejection, the trend line breakdown. I don't mind the fill at 50. Obviously, 55 would have been a little bit stronger just because then I could use 50 as my stop line. We are snapping the 50 EMA. I'm a little bit early. I'm almost kind of combining two different trading strategies here. I'm a little bit late for this fill, but then I'm a little early for this one. Oh, are they retargeting VWAP? Fuck. It might be. I might just need to kill this. Hang on. I'm going to give it a second. How much risk do I want to take? It bounced right off this 50. All right. Do I want to close it early? Hang on. VWAP is currently 82. Let's look at Bookmap. Oh, wait. I lost my NQ. Fuck. Okay. I'm flying a little dark here. All right. Shit. All right. That got tagged. Fuck. Damn it. Why am I missing this? Hang on. NQZ25. I wish I had this. Subscribe. Hang on. I'm missing some data here, team. I did not recognize it. Okay, this is going to take a second to populate. This is going to take a second to populate. Shit. Come on. Oh, brother. Oh, brother. Oh, brother. Is this loading up? We're right at VWAP. I just killed that position because I didn't realize that I didn't have this book map up and I didn't know where those zones were. Maybe it was smart. Maybe, I don't know. There's going to be an aspect of luck to it. It's still loading. All right, that's taking a minute. Yeah, we're right at VWAP. We'll see. We'll see. We'll see. We'll see. We'll see. SPX did pop. It's all this. It's not call buying. This is people getting out of puts. Tells me that this is on shit. Fuck the Russell. I completely forgot to pay attention to the Russell. Shit. Oh no, I've given back like half of this. Fuck. 5 and 10 are pushing. Okay, we're coming up to this test at 800. Let's see how this plays out. Oh, I can't believe I messed that up with the Russell. I got too distracted on NQ here. I got way too distracted on NQ. Shoot. All right, we are watching this level right here, 800. Right now, obviously, we are targeting some of these upside gap fills. We're going to see if it's going to hold or if this is just going to get these fills or get rejected and then vomit. Fuck me, dude. Well, in a weird way, even though I didn't plan it, it would have only saved me, it did save me a couple points, but obviously NQ is still going, so saved me some money over there. The accounts with the larger buffer are still completely fine, but the ones with the smaller buffer, having a buffer completely changes the game when you're trading on those sim funded accounts. It really, really does. Vol is still up. Interesting. Vol is still up. Well, it's getting hit right now, but it's up 7.7%. Wow, I cannot believe what I did with the Russell here. Fuck. I was way too distracted on NQ. Way too distracted on NQ. All right, we are coming up to the first key test right here, 6,800. Let's see how the market reacts. The upside gap fill is 6,821. Let's see how in the world this wants to play out. Damn, they might just fucking go right for it. Right where my cursor is, 6,821. That is the low from yesterday. This is quite the pump. Mag 7 bouncing off its delta low here. S&P 500 dropped, popped, dropped, bigger pop. We're getting... Now there's probably, if I had to guess, people playing for that upside gap fill. Not much. It's puts are getting closed. People are not buying calls. I know it sounds crazy right now that I'm the person like screaming wolf and trying to like let you guys know, but all I can go off of is the data that is being shown to us. This pump, the delta is only going up because people are locking in their puts. They are not buying calls. Bulls are not, well, right there's a little bit of a step in, but the call line is the orange and the green. Orange is all expiration put together. Green is the 0 DT. People are not buying 0 DTE calls. They are getting out of puts. When you get out of puts, that means market makers don't have to be as short as they were, as in they can buy back some of their shorts, as in it pushes us up, which is a very different thing than people buying calls, and then to protect calls, they have to buy the underlying. So I suppose you could argue the net effect of the underlying either going up or down is the same. But to me, it's important of, are we going up because of bullishness or are we going up because of lack of bearishness? And right now, this pump, I'm just letting you know, as of this moment, like even this, more calls are getting sold. This is just puts. People are getting out of their puts. Interesting. Interesting. A little bit of call buying there. All right, we broke 800. They might just be going for this gap fill at 2-1. Oh, brother, at 2-1. Wow. Wow, if I played the gap fill, the fucking amount of money this would have made. It's still, yeah, this is a market maker phenomena right now. You could see it. People are still not getting calls. It's these puts. They're just getting closed out. Everyone who played super short-term puts is basically trying to not be the last one holding the fucking potato. Wow. Holy crap. That really got going. All right. Well, at this point, I'd prefer they just go and hit it now. I don't want it to get this close because that makes the trade that much more difficult. If they get it close but don't quite hit it, well, are you going to feel comfortable either way then? Wow. Look at that. 70. We pumped 35 points. This is the power of the options market, folks. The absolute power of the options market. All right, I'm watching 810. There is a gamma level. I'll kind of zoom in so you can maybe see it a bit more. Right here, 810, and then 825, which is the upside gap fill. So we're watching this node and we're watching this node, and we're going to see how things play out. But at this point, without a doubt, I'm paying attention to 820. And then from there, I have no unique prediction of breakout or failure. It's more of, can we play it from that moment? So it's more of, I want to pay attention to the reaction here. Of course, it might fail early. That's possible. Maybe too many people load up and they're not playing the gap fill, and we're going to keep watching this. But what's really interesting about this is still no one's playing calls. No one's playing calls. This is all puts being sold. They might be STO, sell to open. They might be selling to close. Most likely it's selling to close right here. People are buying puts again, but no one is chasing this up to the upside on calls. And if you are, it is tactically a bad decision, because if you're right and you go up, VIX is going to come down and you're going to be losing out on extrinsic value anyway. So even in the event that you are right, you're actually wrong. So if you want to be bullish, there's a better way to express it. You could sell puts, which are going to benefit from not only the delta movement to the upside, but you're also going to benefit from the vol crush. Or you could go long on another levered product such as futures. But when we see vol spikes and you're trying to buy that bottom, buying calls, going long calls is a very, very poor decision. I'm not saying to not be bullish. Maybe you're really good at predicting bottoms, but I'm saying in terms of the tools you have available to you, you should not be expressing your bullish opinion via buying calls. When you buy calls in a vol spike and the price starts to go back up, vol's going to die. The VIX is going to come down. So you're going to be losing part of your premium value anyway. And the more it goes up in price, the vol is going to come further and further down. So even in buying calls, even if you're right in the price movement, you could still not be making money. So please understand that. I'm not telling you to not play it. Like if you're bullish, be bullish, whatever. I'm just letting you know that mathematically there's a better way to play it, because in this entire movement to the upside, yes, you would think that your calls are gaining value, but they're not, because vol's getting crushed and they're probably going to be undoing each other. Or maybe in a best case scenario, you're just not as up as much as you thought you were going to be up. But you have to, buying calls in the face of vol crush. Many retail traders fall for that. Many of us do. I've been there myself. If you're falling for it right now, hey, just learn from your mistake. Just understand that, hey, sometimes this happens and whatever. Shit gets crazy every once in a while. Oh, Oh, I was thinking about snagging this long right here, but I'm way too late. I'm way too late. Fuck. I should have 60. I could have been in risking 10 points. My evals are not looking so good right now. What? Oh, the bot just fired. One of the bots, the Orbo. FFN. Right here. This bot just fired. Almost locked in, but missed out on it. This is the 10-minute Orbo trade with some directional momentum filters. Long at 81, trying to lock in at 84. That's this account right here highlighted. Running into a little bit of an issue here at 810. Like I said, upside gap fills all the way up here at 820. VIX is still getting hit. Actually, it's really getting hit. All right, we just locked that in. That's cool. So the Orbo trade locked in again. Pretty good system. It's not necessarily the end all be all, but I think it's pretty solid. I think it's the end. I think it's decent. I mean, it makes you money. It's up about 1.6K, and it's a super basic, super rudimentary system. Is it 10:01? Yes, it is. Okay, so we're past the 10 a.m. hour. In reality, I probably should have waited till now. I had these visions of grandeur this morning. When I saw this breakdown here at 9:38, I said, cool, we're going to get a quick flush. I can make my profits on the day, and I could just be done. Like I said, I had too many visions of grandeur in my mind of like, okay, just get in, get out, and be done on the day. And I think I tried to rush it a little bit too much. And then the second trade, which I don't mind the entry on either. They were unfortunate. Like one was a little failure a couple minutes into the day. I don't mind it. I was risking the high. The other one was a pump to VWAP. I was trying to play that breakdown back to the trend line. Just didn't work. Like it, sometimes you're going to have trades and they just don't work. The downside today, I would argue, is just that we're moving so much. So my anchored risk points were just kind of far away. And that means if you're right, you can make a lot of profit because we're moving so much. But if you're wrong, you're also like the sword cuts both ways. You're going to lose quite a bit. So the day's not over. I might need to size down a little bit here. I should probably size down. But we're going to see. We are coming up to the low from 2 trading days ago on the SPY and the Qs. VIX is plummeting. A little bit of a pop, a tiny bit of a pop right there. Actually, just got clocked again. I'm still waiting for this upside gap fill. We have about, I don't know, we're running into this gamma level. It's also the SPX 50 EMA. I mean, at this point, I would have just preferred that we pop up here and then fail, and then we could reevaluate at 6,800. I'm not at all going to like this setup where we're within 10 points, but just don't get the upside gap fill. I'm going to find that to be particularly frustrating. Is the Orbo play trend direction breakout of Orbo or both? Is the Orbo play trend direction or Orbo or both? I don't really get the question, Randy. The Orbo trade itself is just the first break. That is like the traditional Orbo trade of like whatever side you break first, you take that trade. That wins a lot, but over the long term, it is not net profitable because the few occasions where you take a hit, it's a big hit. But to make it profitable, what you would want to do is only take the Orbo if it's also with some sort of like you add on a filter where you're like, okay, it's the Orbo, but the Orbo's is in agreement with some other larger direction. So that like, I did it for 1 week where I was trying to like prove a point that it goes bust. And then within that first week, it did go bust. And then ever since then, I added on a directional filter on top of the Orbo trade. And ever since then, it has not missed at all. Has not missed at all. All right, we're just kind of waiting. Looks like the VIX maybe found a bottom here in the low 18s. We're putting in a higher low on the Russell, potentially just a continuation of the higher lows on the SPY and the Qs. To let you guys know, still no one is buying calls. It is, but what you might be thinking, okay, why are they not buying calls? Well, remember, the markets are moved by big players, and big players understand you can't buy calls in this. What you could do is sell puts. So that actually leads me to believe this put movement of selling puts might be a big combination of selling puts to open and selling puts to close, because you're going to benefit off of locking in your profits. But then if you go to the other side, you're benefiting off of this pump as well, because vol's coming down, you're gaining delta in your favor. So you're benefiting there. So that's why no one is playing calls, because remember, this big movement comes from big players, and big players understand vol crush, which this should tell you something. Even if you're not like fully understanding what vol crush is, you don't have to take my word for it. You don't have to believe me. Look at what big money's doing. Ask yourself, is big money buying calls right now? The answer is no. In aggregate, across the board, big money is not buying calls, and definitely not 0DTE calls. So if you are, you have to ask yourself, why are you doing that? Why are you doing that? When you're just kind of not like, life is far, far easier when you go with trend. I'm promising you that. And that is just, you're not going with the trend. You're not necessarily going against it, I suppose. It's not like we're trending down. The delta, obviously, net is going up. But I really need to drive home this point that it's the put movement. It is not the call movement. Does that make sense? Can I answer like any specific questions on that? Anyone catch the whiplash? It hurts. What whiplash? It's only been up today. We've had a little bit of dip for the first cut. This isn't whiplash. This is just pump. This is clear pump. I am smarter than big money. Hey, congrats. No, but small money here. Just bought some ETFs and stocks. I think you're a little early because we still haven't gotten the downside gap fill. If you're adding to your other accounts, why do it before the downside gap fill? Eventually, those gaps are going to get filled, so why not just be patient for that? If you're adding right here, it has, at least to me, the indication that you're being a bit impatient, because just to drive this other point home, SPX downside gap fill to 6,750, and then NDX has a downside gap fill to 25,126. Do I think that the New York elections are going to impact the market? Probably not. Like, I mean, it's a gradient. I think if they do impact it, it's to a minimal degree. But adding right here, I mean, when I add to my long-term portfolio, I basically, like, I either want to just do brainless dollar cost averaging, where the brokerage has it set up for me and I'm just like not thinking about it at all. Hang on. Hang on. I'm a little bit right here. We dipped to the 50 EMA. We broke out. Hang on. I'm watching this because we still haven't gotten the upside gap fill. That's part of my mind here. And I'm just wondering if I can snag it with low risk and quickly move the stop to break even. Or we break down and vomit all the way to VWAP. Watching this because for most of this, we were just riding VWAP. Riding. Now we've pulled back into the VWAP, the EMAs, and it now kind of seems like it has to make some sort of decision. Some form of a decision. Okay, I got beat up. Oddly enough, these were two really quick trades. It's just, oh, there goes the snap. Shit. Well, good thing I didn't go long there. That could have gotten painful. Holy crap. Someone just dropped size. I bet we could see it in the options market. No. Oh, yeah. There we go. Took a second to update. Yeah, someone just dumped options. They sold calls, bought puts right there. We added negative delta. We removed even more positive delta. And that's the vomit you see in options. And that was one big trade. That was like one big block trade. Golly. Can I get a golly gee willikers, folks? 10 a.m. reversal? Maybe. It does seem like somewhere between 10 and 10:15. I don't have the exact stats on it, but anecdotally, it does seem like there's been clear shifts right past the 10 a.m. hour. Not every single day, but it seems prevalent enough that if you, once again, can attack it with minimal risk, it might be a tradable opportunity. But what I find fascinating right now is the potential EMA switch. So we have the 10, the 20, and the 50 EMA on the 500 tick riding. All of a sudden, we're putting in some lower highs now. Maybe this is better up here. The question is it going to fail? What the fuck? Access denied? Stop. Access denied to what? To this one? It denied my access to one of my accounts for some reason. One of the evals on Take Profit. I'll have to figure out what the fuck that was about. I sized down just because vol is a little bit crazy, and if I'm wrong, I don't want to take an even larger hit. Okay, there goes those evals. Fuck. I played too big on them. That's why buffer is king. All right. I'm trying to play the EMA flip. I'm trying my hardest. Can I move it to here? Well, at this point, if I'm playing on these accounts, what is this risk? This risk is 50. What am I in at? I'm in at 35, so that's about 15 points of risk. Now that I'm only playing with my big accounts, I could probably do what I actually want to do today. $40. That would have been a decent entry. If I throw in another one right here, 50, 56. I don't know if I want to size up yet. It feels like we're not necessarily out of the woods because we still didn't get this upside gap fill. Maybe it's a double bottom right here. 90. Let's watch. It's more of a question of, where is my risk? This whole game is just, what in the fuck is your risk? What is your risk? Uh-oh, we might not be coming down to this. The Russell's catching a little bit. The Mag 7, something in the Mag 7 took a pretty considerable hit at 10.08. The S&P 500, what are we doing? Oh, am I too early again? Am I too early? If I am too early, I still don't want to pull a Friday. Fuck. All right, well, that's exactly why I did one. Are we flipping back? 65. What is the risk? 28. Oh, we still don't have that upside gap fill. See how the EMAs, they curled? Bullish, bullish, bullish. We flipped over, tried to go bearish. Dip was bought. That's a decent breakout. Trade at 52. Do I want to take it? Yes, no, maybe so. Yes, no. Maybe so. Yes, no, yes, no, yes, no, yes, no, yes, no. We still don't have the upside gap fill. Okay, big swing there in SPY. All right, if this curls back around, I think I'm going to take a stab at the long direction. I just want to know, how deep is this pullback? I would love a little kiss of these EMA lines, and we pop off of that, and then I could just risk whatever this is. Is that good enough? Yeah, fuck it. Why am I getting errors? What the fuck is this error? Okay. What is this high? All right, 95. Let's do this up to. Okay. All right. We're going to set up this risk. Let's pray that that doesn't break down. Okay. What if you're just joining in right now, the main watch right here is this just a double bottom right here, higher low, pushing us up to I suppose you could call it 21, but it's really 6,820.62. In fact, it's so important. I'm going to set an alert there because that is the upside gap fill on SPX that I would love to try to capture some profits at. Obviously, this is a weaker one to play it off of this level. It would have been far better to play it off this 941 bounce, but hey, whatever. That is the target. And then if you're paying attention, I might as well get the NDX level up here. This is NDX once again, not where the fuck is that low? It's actually all the way up here at 25,887. This is NDX, not NQ, to be very clear. To be very, 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 very clear. Same thing. It's having issues at its 50 EMA. Question is this little dip right here at 1012, what's going on? Are we changing course or is this just the higher low? Oh, today would have been way easier if just like out of the gate we pop rip upside gap fill and then from there vomit. But they're making it a bit difficult on us today. Playing QQQ puts. I don't know what your time frame is, but it still feels a little bit early because neither the SPX nor the NDX have gotten their upside gap fills. Feels a bit early. However, I think there's a decent chance, maybe over a 50% chance, we'll give it a 60% chance that on this upside gap fill, you have profit taking that leads to the actual sell-off. All right, I'm going to also set, all right, this is a clear watch, obviously. SPX is going, NDX not so much. I'm basically break even on this current trade. I'm down on the day. Took a couple stabs at it. Not necessarily the most happy. Uh-oh. Having a little bit of profit taking here. Patience. We'll see. You think QQQ is still going to push? I think that's the wrong question. A lot of people come in and try to ask me prediction-based questions of do I think up or down? It doesn't matter. All you have to do is measure the key levels and watch the reaction. I am telling you, the next key level is the upside gap fill. Where we go from there, I have no idea. Your goal as the trader, or what you should be doing as a trader, is paying attention to this level and watch and see if it just makes a higher low and continues higher, or do we just get rejected and puke down back down to 6,800? That is your, like, as a trader, that's how you make money. I know for some reason there's this sentiment that you can predict where we're going. You cannot predict. It's just too many unknown variables. What you can do is react to key levels and look for optimal risk to reward setups. So many retail traders get stuck in this world of thinking that there's like a predictable model. That's not, the next bar could be a giant green bar, the next bar could be a giant red bar, and it could be anything in between. And for the bar after that, it can revert it, it can continue it. You just don't know. And it's just the way retail traders are taught about trading is verifiably wrong. And how do I know that it's verifiably wrong? Well, because in terms of active trading, I'm not talking about investing, but in terms of active trading, 90 to 95% of retail traders lose money. So if you tell me that 90 to 95% of people attempting to do something are not good at it, it tells me that they're not being taught the right way. And then all of a sudden you start to dive into, what's going on with those other 5% that are actually successful? Like, what are they doing that is measurably different? And that's where the conversation gets interesting, and you realize that they just approach it in a completely different manner. All right, do I want to go stop to break even so I don't risk money on this? I should at least if I move my risk up though, I should probably take all risk off the table so I don't dig myself further into a hole. It's so close though, and this vol is so crazy. What risk do I want to? Super trend is up there. All right, we're taking 10 points of risk off the table. This is still a little bit too wide of risk, especially considering my loss in the day. I would just love for this to get locked in. So I have that freebie. Trade. Oh, it's coming back. I don't like this. Just keep it green, brother. Keep it green. All right, did this load? It finally did. I don't have my point of control or anything. This is actually looking kind of messy. Things are still loading. Okay, there are buyers at 60. That's protecting me. That's a good thing. Oh, they just disappeared. Scratch that. I was all excited. I was like, cool. Like my fill is right where there's a lot of people buying. So like I have natural support. But they were only there for about 4 seconds and disappeared. So that's fun. So that's a day in my life. Ooh, do I do it? We're not even 1 bar past it. All right, here's the new updated game plan. Breaking whatever this is, 79.80. This is a higher low. I could play my risk off of that. But first, obviously, this needs to break. Come on. Watching this trend line. I don't need a random fucking fluke. Come on, just break 80. Trading with trend. We're still playing the upside gap fill. Come on. It's refreshing that your stop loss inner debate is the same one I have myself every freaking day. I thought I was alone. Hey, we're all together alone, you know? You know how it be. I just want to take out this fresh high right here, this recent high at 1020, because then I could just take my risk off the table. I'm just trying to get in a freebie trade. I have not had a freebie trade yet today. I've been trying to trade, like I attempted to trade the momentum shift here. It just didn't shift for long. You could see momentum was bullish, tried to go bearish. I tried to play the VWAP. Nope, pop back up. Things got choppy, bullish again. I'm attempting to play this and it doesn't, like, it kind of makes sense. I mean, there is the upside gap fill, but it's a game of risk management. That's all this is. It's not a game of prediction. It's, do you manage your risk well? And I know I say that every single day. I know I sound like a broken record, but that is the secret to trading, is identify the key levels and try to play off the key levels, whether it's a continuation, a reversal, a fake out, whatever it is, and just minimize your risk. Even if you're right 50-50, you could still be massively net profitable by just managing your risk properly. Someone said the VIX is curling back up. We should check that out. No, it's not. It's at its low of the intraday trading session. What are you talking about? It's curling back. It's literally the lowest it's been since 9:30 market open, and you're saying it's curling up. Folks, what I'm looking for, quick upside gap fill, 67994 right there on the SPY. The Qs have a bit more distance to go. I'm not necessarily holding out for that. If it happens, it happens, but I'm really watching it on the SPY here. I have some alerts set, 6820. It's just, can I play this? And I'm playing it via NQ. Can I play this without much risk? At this point, the fact that we're this close, I feel pretty deeply it's going to happen. It's just, can I take advantage of it with minimal risk? Oh, the flow. Oh, the Mag 7's getting hit. Folks, this has this setup for a tapping crap. The old gap tap crap. We might be setting up for a downside gap, upside tap gap fill, leading into a giant crap. Mag 7 is getting hit. Even the SPY is not looking that good anymore in terms of the delta flow. So at this point, it's just, are we going to get that self-fulfilling prophecy of the upside gap fill? So we already have the gap. I'm looking for this tap. And then from there, and this is a prediction, as much as I'm telling you not to predict, I'm just trying to read a little bit of the tea leaves here, that things are not looking the best. And if they're not looking the best, I wonder if I should now, so I could move my stop to 56. I'm in at 61. That's 5 points of risk. I have 2 contracts. That's 10 points. That's $200. I'd prefer not to lose any more money today. I've already lost enough. I just want this breakout of 80. If we can get this break of 80, I can move my stop to break even, and then it's a lotto play. And if it works, it works. If it doesn't, it doesn't. My goal is to eat back half my loss of the day, and then we'll move on with my life, you know? We'll move on with my life. Come on. All right, we're just doing it. I don't want to... Fuck, it didn't break. I'm trying to move my stop up. Come on, just break for me so I can follow my plan. Just break. Just break already. Show me one little wick, brother. One little wick. There we go. All right, cool. Stops break even. Freebie play. So when you're in a hole, one of the best things to do is stop digging. I love that as a saying, and I think it very much applies to trading. I was in a hole. I'm in a hole. One of the first things you do when you're in a hole is stop digging. This is my effort to stop digging, putting my stop at break even. And let's lock that baby in. Let's take some of this off the table. Come on, brother, 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 mother. Brother, 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 mother. Brother, brother, mother, brother. Brother, mother, brother. Oh, brother, mother. Come on, brother. No fucking way. 1.5 points away. Dude, is it going to do me dirty like this? Is it going to do me dirty like this? Come on, don't do me like this, brother. We got to 93.5, and you guys have seen my order in here at 95 this entire time. Granted, I'm not risking any, but still frustrating. Still frustrating. Dude. Come on, market gods. Don't do me like this. Don't do me like this, market gods. Look how close that got. I thought I was actually, because I didn't want to be in this situation of like front running it. Of course, my natural target was 900. So I was like, okay, Matt, let's not have one of those days where you're off by a tick or two. It comes to 99 or 98. So I was like, you know what? I'll front run it by 5 points. And this is how I get treated. This is how I get treated. That's like today I thought I outsmarted the system. I truly did. I was like, okay, cool. We're not doing the 1.1 tick, 2 ticks, 2 points type of a situation. I was like, we're gonna front run it by an entire 5. And it still comes for me. And it still fucking comes for me. That's uncanny. I'm like, part of me is wanting to hit this close button just to lock in some green. Wild. Absolutely wild. I thought I beat the system today. I did. All right, we have some buyers here at 64. That should be good because my stop's at 61, so I'm a little bit protected. But let's I was going to say, let's hope it's not a waterfall that just destroys it. Uh-oh, the 100 tick flipped bearish right here on that break. Fuck, is it coming for me? Come on. As unlucky as I got there, can I get lucky here? Will we experience the conservation effort of luck? unlucky to maybe lucky, just to cancel each other out and be neutral. Fuck. All right, I'll feel better if it can take out 76, this recent high, and I'll feel really good if we could take out 82. Come on. Are these guys still here? They are. There are buyers at 64, which it's about to fill. Fuck, is it going to overshoot them? But then there's sellers that keep coming in at 75. Well, I'm not risking anything, but that is surely a bad beat. A point and a fucking half away, dude. That is brutal. Absolutely fucking brutal. Son of a bitch, dude. Son of a bitch. That's a tough beat. That is without a doubt a tough pill to swallow. That's a tough one. Oh, that one's gonna frustrate me. 93.5. Oh, cool. Just enough to knock me out, and then it fucking rockets anyway. Okay, it's survivable. I'm still fine. I'm just like, the goal is to not go on tilt as I did. I keep coming back to Friday, and it's fine because especially on days like this, you have enough range and movement that don't revenge train, don't be silly or anything like that. There is going to be enough movement today, even trading one contract to go profitable. I just need to remind myself, stick to the system, don't get tilted, don't do any of that. Just don't. Damn, dude, that's a brutal one. That's going to be one I'm going to wish I had back. Oh, it happens. It happens. It happens. It happens. It happens. It happens. We still don't have that upside gap fill, I don't believe. We got close. We got to 17. The upside gap fill is 21. They're not making it easy to play this. They are not making it easy to play this. By any means. Golly. All right. Let's see. They're making it a struggle. Well, maybe it is good it knocked me out because I'd be in a little bit more pain. Granted, it could have got... That was my break even. Well, I think I was in at 60, 75, so it was off. It gave me an extra point of slippage. Of course, they're never going to be nice to you about that. Never going to be nice to you about that. Oh, that's a painful one. But it happens. That's the game of trading. No crying in the casino, folks. No crying in the casino. All right, 5 minutes bullish, 10 minutes bullish. 30-minute is testing. I'm interested in if this fails. That would be telling. It would be easier to trade it if we already got the upside gap fill, which we are dangerously close to. But maybe too many people are front running it. Maybe too many people are betting on that. And as we get close, they might be taking their profits. But the 30-minute has tested this 50 EMA. And as of now, it's a failure. But let's see. Let's see. Next trade will be better. You never know. You're not in control of the outcome. All you can be in control of is in the risk. And okay, even though that sucks that I got knocked out for break even, what if it does just vomit from here? I'm not saying that that's likely, but obviously the fact that it's a possibility means that I would be holding onto two contracts, ballooning my loss. And not only am I ballooning my loss, but as you guys saw on Friday in the opposite direction, that means I miss out on getting in the trade of that new direction. So really, it's a 2x loss because you're ballooning your current loss and you're missing out on maybe the trade that you want to be involved in. So when you consider it that way, like you just, as painful as it is, assume your trade is 50-50. Half the time you're going to be right, half the time you're going to be wrong. Thus far this morning, I've had a lot of unfortunate bets. Some of them I've gotten out at break even. Other ones I had to take the loss. And it just is what it is. But you got to keep that risk in control because that's what keeps you in the game. And I deeply believe when this consolidation breaks one way or the other, there's going to be a big enough move that you make all your money back anyway. So it's just keep your risk in control. That is how you win this game. Without a doubt, that's how you win this game. Take some profit, get back on track. I don't agree with that. It's take your profit if your system tells you to take profit. There's too many retail traders. Remember, once again, retail traders who are 95% of the time losing money, like they are not net profitable. That's the thing that they fall into, is as soon as they see a little bit of green, they're like, gotta take it. And when they have red, they just hold it and hold it and hold it, and unfortunately let the situation get worse. Take your profit if your system tells you to take profit. Move your stop to break even if your system tells you to move it to break even. Take the loss if your system tells you to take the loss. Follow the system. That's such an emotional comment right there. And you see it all the time in retail trading is massive loss, massive loss, massive loss. They get a little bit of green, they take it. But really, if they just stuck to their system and held that one winning trade, they would have made it all back. But now in this situation, they're still deeply red. I don't agree with that at all. Standing red, take some profit, get back on track. No, you stick to your trade. You stick to your system. You do exactly what you're supposed to do. Ideally, you have the discipline to do it 100% of the time. That's what you do. You don't deviate. Maybe if you feel like, I don't know, maybe you deviate if there's about to be a big announcement or something and you're like, you know what, I'm going to close out early. I just don't want to take the risk. I understand that type of discussion. I understand those types of an argument. But in terms of you're in a trade that you like, if you're just taking green to take green because you see it, that's not going to end well. It might be fine on that trade, but in the aggregate, that might end up forcing you to become a net loser in the long term. There's a lot of little sayings in the world of trading that are just inherently wrong. And the saying of no one went broke taking profits, that is an inaccurate saying. Yes, on that one individual trade, you might make money. But if you're continually taking profits way too early, yeah, that actually might break your entire system and it might cause you to actually legitimately lose money. Oh, fuck. So this is actually a breakdown trade for me. We popped up, we failed, the EMA is crossing over again. You have a nice 50 points all the way back down, but we haven't gotten that upside gap fill. Maybe we won't. Oh, the Mag 7 is getting smoked right now. The SPY is looking, dude, why can't we just get the upside gap fill? Make everyone's life easier. I would love to know the number of retail traders by numbers of years traded. That statistic of 95% of losing money includes everyone who ever did a single trade, lost, and never tried again. Where are you getting that from? You just made that up. The 95% statistic is not citing people who did a single trade. You literally just made that up, Chris. You assume that that's what it is, but no, we actually can get hyper detailed breakdown from these earnings announcements, and the definition of someone who actively trades by all of their own admission is not a single trade. You literally just made that up. Oh. 69. What distinguishes a retail trader? Well, a professional is just someone who's employed on Wall Street. A retail trader still is an individual, but if you want to get more philosophical about it, I think the difference, whether you're trading your own account or not, a retail versus pro is going to be, I would say the big designation, the big differential in their trading tactics is risk management. I think as a retail trader, you go from quote unquote retail to pro when you actually understand risk management and use proper risk management in your trading. So there is obviously a legal regulatory definition of retail versus pro. But then I believe within the trading space, when we say it's either good or bad, are you net profitable? Are you trading well versus not? I feel like we take on two different definitions. And with that other definition, more of kind of the useful one for us and not the regulatory definition, I think it is better defined as just risk. What is your distinction between profitable and net profitable? Well, you could have a profitable trade, but not be a net profitable trader. Net profitable is, are you profitable over whatever X amount of trades? Profitable is just the definition of like a singular trade. Was a trade profitable or not? You could be a massively net profitable trader, but not profit on a certain trade. And obviously vice versa. And this is what happens with most retail traders. Most retail traders focus on one trade where they made a profit, but they are not net profitable. But also, this is not my distinction. These are like well-defined terms. I want to clarify that, Garrett. I didn't make up these definitions. That's basic business definitions right there. I didn't, it's not like Webster Dictionary called me up and said, hey man, how should we describe net profitable and profitable? These are just basic business terms. All right, we are putting in a higher low on both the SPY and the Qs. We're still going for this upside gap fill, which we are very close to tagging. Very, very close to tagging right there. Let's see how this one plays out. I have an alert. I believe I have an, if this hits, an alert should go off. We're pretty close on the SPY. 94. We were off by 3 cents, and we're a bit farther away on the Qs. The Qs would have to go all the way up to 29.85. But I'm curious what happens here. Once again, we're not attempting to predict. We're here to say, yes, this is in a very important key level. Do the bulls hold it and do we continue? Or do the bulls take profit, the bears reject it, and we puke back down to 6,800? That is what we are watching for. That is what we are looking for. That is what we are paying attention to. But being adaptable isn't a bad thing. You see the trade is breaking down your drawdown handicap. It just makes a question. No, you stick to your trade no matter what. You see it breaking down. How do you know the next bar? You are greatly overcomplicating it, and you're also greatly overestimating people's gut feels versus an actual mathematical system. This idea of you see it breaking down. No, mathematically define what is breaking down. Did you break an EMA? Did you break a trend line? If you did do that, great. Put it into your trading system, because then you could actually backtest it and know if you have something that actually produces either better risk management or edge. But you're easily leaning yourself towards like, nope, this is now becoming discretionary. There are very, very few traders. I'm not saying it's impossible, but there are very few retail traders who are net profitable as discretionary traders. There's actually very few profitable traders in a general sense, but in the pool of people who are net profitable, most of them are systematic, mechanical. And can you be profitable as a mechanical trader? Or, well, yeah, obviously as a mechanical trader, but as a discretionary trader, yeah, it's just few and far between. Like, it's just, we're playing the game of odds. And if you want to increase your odds of success, stack your deck in the favor. You don't do silly shit like that of like, yeah, no, just like personal opinion and like gut feel. This concept of like gut feel, it's absolutely horrendous. Absolutely horrendous. And my proof to that is just how many people attempt to do it and lose money. So the SPY did get its upside gap fill, but the Qs have not. SPY has, SPX has not. Technically, there's a little bit of a gap still. And maybe we're going to be getting it on this push. Why is RUM getting beat up? Because people are agreeing on a transaction at a lower and lower price in the face of the entire market selling off. It's not, why does anything go up or down? It's just where the highest willing buyer and the lowest willing seller meet. That's how every single market works in the world. As to why people are coming into a buy and sell agreement at a lower price, well, you'd have to ask them all individually. My best guess is that the Russell is getting clapped. The SPY is getting clapped. The NASDAQ is getting clapped. It is just going to be somewhat correlated with the overall market. And in RUM's case, specifically the Russell. If you go into it with a plan, then you already know what's going to go before you do it. Just waiting on the market price points you. Yeah. I mean, too many people, like, I don't believe, I deeply know and have witnessed that way too many people just misunderstand what trading is. And there's a lot of conflation with investing just because they're both happening in the stock market. And like, it's just like cool, suave, mysterious thing of like, oh, we're just going to predict. No, dude, like your predictions are going to be 50-50. Just accept that. Yeah, maybe you start to get a bit better and maybe you can increase those odds to 60, 65%. Maybe. But even that, let's just say you're lights out at prediction. Oh, fuck. All right. SPY got the gap fill. SPX didn't. And yet people are reacting anyway. All right. Let's see how deep this pullback is. Initial attempt. Didn't get it there. Did get it here. And we're starting to get a little bit hit. A little bit hit. Met some kid Friday, told me he was a profitable day trader, did not know what a Sharpe ratio was or tell me what systems vehicle he traded, called BS. Oh, yeah. 100% that guy's full of bullshit. 100% he's full of bullshit. The concept of being profitable is so, we throw it around, it's extremely difficult, and to somehow exceed that barrier but then not know what a Sharpe ratio is and tell you what he trades. Like, yeah, that means he made one or two trades, got lucky, and now he thinks he's like this hot shot trader. Trading is extraordinarily difficult. It's extraordinary. Your base assumption when you meet any trader, just like your base assumption should be that they're losing money, because that's what most traders are doing, especially retail traders. Like, that's not a hit on them. You're just doing basic math, like basic math. All right, potential trend line breakdown on the Qs, potential initial trend line break on the SPY, but there is a more extreme one that we could be paying attention to. Looking at this, VWAP is all the way down here at 800. That's a very solid target. If I can see a low risk way to get in, I might take advantage of it. But remember, SPX technically, dude, this is going to be setting up to be one of the most frustrating days possible. I can already sense it. Because, like, even though the SPY got its upside gap fill, should we be looking for shorts? The SPX didn't get its upside gap fill. Mag 7 is looking horrible. SPX is just looking choppy, I guess generically trending up, but very, very choppy. VIX is picking up a tiny bit, but it vomited all the way from 19.3 down to 18. Oh, fuck. I guess I could have taken this short at 53. My risk would have been 65. That's within my parameters. That would have been fine. Fuck, I missed it. Maybe. I don't know. Still in, like, that one wasn't necessarily an amazing setup right here. This, like, we puked, we bounced, we puke again, you go short at 53, you risk that high. Like, that's an acceptable trade, but I'm not saying it's the easiest one to stomach because SPX hasn't hit the upside gap fill. Market said close enough. Jason, that's the vibe thus far. They're not making it. They're not making it easy. What's the Sharpe ratio? In layman's terms, it's how much was your overall reward, but against the risk that you take to get it. So it's one thing to make $100,000 in profit. It's a completely different thing to make $100,000 in profit when your downward swing was 50K versus 5K. In the latter case, you'd have a better Sharpe ratio. So it's like I said, in layman's terms, without getting into the specific math, it is a measurement of your profits against the risk taken to get those profits. So obviously people want a very high Sharpe ratio because you want to be making money, but you want to be making money taking on low risk. In a certain sense, it could also be a measurement of how much you can leverage your overall system, because if your system has low risk, that means you could lever it up quite a bit. Not all profits are made the same. Like I said, in this hypothetical example, $100,000 in profit can mean very, very, very different things. And actually, from some of the people I know on Wall Street, they'll care more about that than your actual net profits, because like it's really easy to leverage something and put more capital behind it. They just want to know the relative drawdowns that they have to potentially withstand. I'm not a profitable trader. I'm a profitable gambler. I don't lose my money. I lose my wives. Oh, look at that. All of my trades would have worked anyway. It's all just a game of how much risk you're taking to, I guess, handle it. VIX is starting to pick up. Lower right of your screen. Pay attention to this. I guess the SPY gap fill was enough for the market today, because we look at that. A little bit of a baby region right there. Said nope. Imagine, like me, how many people just missed out because their profit target was right there at 20, rather than 20.1 versus 20.6. It was a half point away. That is brutal. People I know on Wall Street. Okay, bro. Wait. Do you think I don't know people who work on Wall Street? You realize that I'm here in New York, and before I started making content, I was in that circle. I was in the programs to work as a quant. Really? You think? That's a weird one. Like, I know the internet just like randomly lobs like whatever accusations, but what a strange one. Like, you think I just lie about people I know? I didn't even name a specific person. It wasn't like, hey, I know the best quant traders in the world. I was just people I know on Wall Street. You're like, out of all the universe of things that like maybe would be beneficial for me to lie about, you think that's what I'm lying about? Just knowing someone who works on Wall Street like that. I mean, I guess maybe people have lied about pettier things in this world, but that's a weird one to lie about for sure. That's a strange one. No, if I'm gonna lie, I'm gonna make it worth my while for sure. I'm not gonna just be like, oh, he knows someone. Like, what? A fucking strange lie. Like, truly, what would be the benefit of that? It's just like, no, he doesn't know those people. Like, what? All right. I mean, obviously believe what you want, but if I'm gonna lie to you, I'm gonna make it a higher utility lie. Fuck, dude. What a trade that would have been. Fuck. That was a trade. I was a little gun shy because of how many times I got chopped up. And I would have already been up 50 points. I would have been down net 400 right now. Yep. A quick touch to VWAP. Now we're going to play the fun game of, does VWAP hold or fail? All right, folks, we're at a key technical level, VWAP. We're at a key psychological level, 25,800. And now let's play the fun voting game. Do we bounce or do we break? What do you guys think? Are we going to hold above VWAP or are we going to bust below it? 1,200 on that short. I am jealous. Like I said, this was a great trade. If you took the trade at 53, you had well-defined risk. You were taking on 12 points of risk, 13 points of risk. On the initial break, you already moved your stop to break even, and you get to play it all the way down to VWAP or to 2,800. That's 50 points. That's $1,000 per contract. I would have played it with 2 contracts. I'd be down net 400 on the day. All right, break, bounce, bounce, break, 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 break. Ooh, Rumble is a little bit more bearish. We have more bounce votes on YouTube. Interesting. Why do we have more bears on Rumble relative to YouTube? I wonder why that is. Fill the gaps already. It technically filled it on SPY. Technically filled it there. All right, a little bit of a breakdown on that. A little bit of a breakdown on this. All right. On SPY, watch 678.31. Oh, hang on. Hang on. Do I actually want to add to this position? Oh, brother, oh, brother, oh, brother, oh, mother, oh, brother. do I want to add to this? Am I being stupid or am I being smart? Am I being stupid or am I being smart? Mag 7's getting hit, and it's getting hit. All right, fuck it. All right, let me update. If you are in the Discord, I did. Okay, if you're in the Discord, I did add a bit of a position, if you will. A position. All right, we're at VWAP. Fuck, I cannot believe I missed this trade. It was almost as if it was the trade I was waiting for. I tried to take the stab there, but it didn't happen. I tried to take the stab there, didn't happen. The third time it started to break down. I attempted one, no. I attempted two, no. And then by the third time was the charm, and it was the one that I did not get a piece of. Matt is a fake like Mike from TTG. Well, I assume if you're just randomly calling me a fake in chat, there's nothing I could do to possibly convince you otherwise, because you're a person on the internet, and if you've come to that opinion, whatever, dude. I don't really give a shit. That's the interesting thing about trading, of being a fake or not, is at the end of the day, I know my accounts. I know where they're at. I know my Apex payouts. I know my take profit payouts. I know my Tradeify payouts. I don't know. I know the success of Piper strategy in Discord. I literally document it every day. So it's funny because on my side of it, I have all of my data and I have all of my results. And then there's just a person on the internet who's like, fake. Okay. Like, at a certain point, it's not even worth my time to try to convince anyone otherwise, because as I show you all the data, and as many of you in here has seen the data, like everyone in the Discord, they know my live trades. Everyone in the Discord knows Piper. You guys see how I'm doing on the sim-to-funded futures trading. I show you my public account, like in the face of proof, like evidence. They're like, no. Well, I am actually really I thought there would at least be a bounce to 30 or something. This was just a fucking rip right back down. I've been searching for good trading options YouTube for weeks. Just stumbled on your channel. You're my fave so far. Ignore them. Well, give me a little bit of time and I will no longer be your favorite. Did Apex approve the payout? They have not. I'm still awkwardly waiting. What was the 0DT ETF's cover call strategy to play out weekly dividends? The SPY just popped up in Feb. I think you're just talking about cover calls, unless I misunderstand the question. Sim to funded, how much real money do you make or lose if you trade 10K sim to funded? That's not quite how it works. I would highly recommend you watch all of my sim to funded videos. I have a whole channel breaking down what it is, how it works, your money at risk, and the money you can get. But in a nutshell, you pay a certain fee to take a test. If you do well on the test, you then have a funded account. And if you trade well on that account, you can request payouts. So your max risk is how much money you've spent to buy the evals and the performance accounts. And then your reward is how good are you at trading? Because if you're good at trading, you can then request payouts. But if you need more of a detailed explanation, I would recommend you check out all the videos that are already out there. Okay, I wouldn't mind a bounce back to VWAP, which is highly likely because 800 is a psychological level and VWAP is right there. So I actually, a perfect trade for me would be a pop back up to above 800, 810, 815, 820. We hit this 50 EMA and then we fail. And that recent spike, whatever it is, if we get up there, is the new risk point and you play the continuation to the downside. In my book, that would be a perfect trade. That would be, if it happens, I don't know if it will, That would be an A plus setup. Vol is starting to pick up. I would want this to weaken a little bit more. I'd prefer that we are below the EMAs, but it does look as if we failed on the 30-minute test. But once again, I would want to see the 5 and the 10-minute breakdown. The 5-minute is testing on the NQ. The 10-minute is testing. So I'm looking for this test to fail. But obviously, as you could see, the 30-minute did fail. It ran right up to the 50 EMA getting rejected. So I would like for this to be a little bit weaker. But in that event, if it does puke, obviously we're kind of right at that tilting point anyway. So sometimes you have to take on a little bit of that risk. The 4-hour popped right back up and that failed. So it tried to get going on these medium timeframes and it simply could not. The Mag 7 is at the lowest delta of the day. The SPY also vomited to a fresh delta low. Little bit of a pop right there. Maybe here, I don't know. Maybe we'll be presented with the perfect trade. I'm unsure. We're going to find out. It could just be an overshoot of VWAP and a recovery and then a pop. I don't know. I'm willing to take a little bit of risk on this trade. Obviously, I have to be cognizant of my accounts and their overall value. But let's see. Let's see if I am presented what I would refer to. Looking at the EMAs, this can't be an A plus trade. But considering everything else, it could definitely be like a B plus trade. So I like it. I'm just waiting to see if it, I mean, look at that bounce. 60 up to 20, 80. Dude, we're moving 80 points like it's nothing. This is a time, and this whole week has been a time to like size down and leverage down just because like we're moving like it's nothing. We're moving like it's nothing. All right. Where's a good shelf to use the initial risk? 33. What is this shelf? 85. We'll move it up to 87. Lock in a little bit of money. And then we're going to have the oh shit line and we completely fucking vomit. All right, we'll see. We'll see. I don't know if this is a VWAP recovery in the bullish direction or if it's the fake out bounce and we fail. Fuck. Do I just want to cut this right now? You can set the risk at the recent high, but sometimes you get these types of situations where it goes a point or two above. So actually, I might use this high if we take out 806. And if not, I'm just using a recent high right over here that we saw back at 1051. So once again, if this fails, if we come back and touch VWAP, whatever is in here, that's where I'll update my risk to. All right, there we go. I'll move it to, so that hit 22. I'll move it to 26. Do I just want to go? Really what I want is this failure at VWAP. All right. We broke 800. All right. Freebie play. Freebie play. When you're in a hole, stop digging. Stop is set to break even. What is this low? That's 64. That's okay. So this is 75. Okay, let's check out where people are loading up. That is not where they are loading up. Okay, we're failing at VWAP. What is this? Okay, the point of control is what? 55. How far did we get? This was 63. Okay, so first target is in between this recent low and right above the point of control, which is this yellow line at 55. So I basically cut it in half. That's 63. 55 is the point of control. I put my profit halfway. And the reason I'm a little bit more aggressive with this is because my stop is break even. Stop is break even. Thinking about moving it to VWAP. Maybe. I just don't want a higher low that pops up Obviously, that's possible. But this is the second time I've gone up unrealized $1,000, which if I took both, that means I would have only been down. But right here, oh, it's going to come fucking knock me out, isn't it? Shit. Again? Fucking again, dude. If I weren't down on the day, I would probably have my stop at this recent high because there's a chance this just like wicks me anyway, but doesn't take out that high and it's just rejected here. Since that's possible, it makes me uneasy, obviously, but we'll see. Yeah. If I were break even, if I were slightly green, my risk would be up here. So I'm playing it a little bit more defensively because I'm down and I'm just hoping I quote unquote get lucky and it just gets rejected at VWAP, gets rejected at 800. But we'll see. Theoretically, I'm taking on no risk, so it is a freebie play, but this might be a higher low. But also on that note, this might be a lower high, so it might be a consolidation break. So if it snaps 80, I'll be feeling pretty good. But however, we're not snapping it at the moment. I don't know what the next trade is going to be. Knowing my luck today and showing you guys how all this played out, it'll probably wick me out and then vomit a second after. But hey, it is what it is. If it can stay below 805, come on. Maybe I'll get a lucky break here. Come on, buddy. Come on, buddy. Could be a lower high. Looking for the snap for a fresh low, and I would have a lot of confidence on the snap of this 63. Delta is not looking good. It is downward on the S&P 500 and on the Mag 7. Vol's picking up a little bit, not as much as I would want it to. I don't think I'm necessarily out of the woods yet. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. All right. We're here. Is it a double bottom? Part of me does want to move my risk to this recent high because then that would at least guarantee 12 points in total, so it shaved 200 off my loss. But really what I'm looking for is this breakdown. I do want to clarify, I've taken all risk off the table. My stop is at break even. The thing I'm considering is moving my stop to in the money. It might just be some weird range bound thing. Fuck. Do I want to sell one here? Or buy one, technically. Just to lock in some green. It's not really the system, and as I was arguing with you guys before, you got to stick to the system, but that doesn't mean there isn't an emotional component. Emotionally, I kind of want to lock in some right now, but that's not what the system is. If I were to front run the system a little bit, it'd be moving the stop to this high. And when I say front running it a little bit, we did break this low, so it's technically allowed, but we didn't really stay below it. We just kind of bounced there, which is why it's like awkwardly in that gray area of, okay, are you front running it too much? Fuck. Shit. Yeah, double bottom. Right back to 800, right back to VWAP. Son of a gun. I can already see it playing out. I can already see it sweeping me and then vomiting. Come on, VWAP rejection. This is why you should have VWAP on your chart, by the way. 100% this is why you should have VWAP, because it ends up becoming a pretty important pivot level. Come on. If it can just take this out, I could probably move it. Or I should move it. Oh, come on. Snap it. Snap it. Snap it. Snap it. Triple bottom? Don't triple bottom me. Don't triple bottom me. A lobotomy? I'd rather have a bottle in front of me than a frontal lobotomy. Fuck. It doesn't. Yeah, we have some buyers stepping in right here, right at 80. Dip, dip, dip. Is it going to hold? Is it going to hold? Take one off. I mean, I have it right here. I'm targeting right in between the recent low at 1057 and then also the point of control down here at 56. So I split it in half. All right. I did move my stop to in the money. So no matter what, I'm making about 5 points on two. So 10 points. So no matter what, I'm digging myself out of the hole a little bit in the worst case scenario to the tune of 10 points. So $200, which is like 7% of what I lost today, if that. But just in case this is a triple bottom bounce that fucks me up, which I don't know. Maybe should I leave it at break even? Just because like that is the wick. Is it going to wick it? I'm really going back and forth of like, am I prematurely moving this? I could do this. Like, why can't my life just be easy? Just like break through, get this fill, and move on. Like, why? Because at that point, then it becomes super easy. If we vomit to here and I get that fill, I lock in one, move the stop to that high, and then whatever. I can let this go for the rest of the day. And if I get back to green, I get back to green. Come on, just give me that vomit, brother. Come on. You can do it. You can do it. Vol's picking up a little bit. Russell, lower high, maybe shoulder, head, shoulder. Mag 7, lowest delta of the day. S&P 500, almost the lowest of the day. Things are trending my way. We're just not price. Everything's going my way, but the thing I need to actually make money, i.e. price. So I think this is a patience play. Oh, little vol expansion there. Come on. Come on, 70. Do we have buyers stepping in? Oh, shit. The point of control just moved. Fuck. The point of control just jumped up. It was down here. Just popped up. Come on, fill it. Fill it. No, not again. You son of a bitch, dude. There we go. Okay. There we go. There we go. There we go. There we go. All right. All right. We locked in some. Locked in loss went from 2.4K down to 1.4K. And if I get out right now, it's a net loss of 400. So completely manageable. So my break even is roughly this line. This is where my accounts are break even on the day, roughly. I'll remove this. I'll remove this. That was at 4 in the morning. What was this? This was 9:34, 63. We'll go to 70. All right. Targeting those lows that we saw, 934, 935, pretty much market open. And my stop, I still have this option. Do I want to use VWAP or do I want to use my entry? I'm right above VWAP. VWAP is 802. My stop's at 805. This blue line is my break even. So obviously, I would prefer this just vomit and go all the way down here because then I'm up money on the day. Cool. But in the event that I get stopped out, it's a manageable loss on the day, digging myself out of the hole. So I'm actually happy with how this has gone. Obviously, I would love for all the accounts to be very, very green, but I'm actually pretty happy with my decision making. I feel like today had all the makings for me to go on tilt, as you guys saw last Friday. And I feel like even with being faced with that mentally I handled it better. And even not necessarily with perfect trading, I'm proud of the fact that I kept the train on the tracks rather than fucking just getting like absolutely demented and tilted and fucking everything up. So I don't know where the next bar. I don't know if we're having a recovery here. VWAP knocks me out and keeps going. I don't know if we're going to vomit and I'm going to make a bunch of money. But remember, we shouldn't be judging the quality of our trades based on the outcome. You should be judging the quality of your trades based on the decision making going into the trade and during the trade. And even though my decision making wasn't top tier, I don't think it was bad today. And when, unfortunately, some of the results went against me, I'm most happy that I didn't get tilted because, as you guys have seen, as recently as Friday, it's not that hard for me to get tilted. And the fact that, like I said, I kept the train on the tracks, I'm happy with it. I'm happy with it. I'm happy with it. Delta, that's the lowest of the day. The Mag 7, that's the lowest of the day. VIX was picking up a little bit. I kind of want to see if it takes out 1840. This feels like it might be important. I have an alert there for the Russell to break down at 242. Here's this recovery. Here's this recovery. We're about to find out. We're about to find out. I'm happy I didn't go broke. That's always a win. That's always a win. Are you trading futures or options? Both. This is futures trading, and then obviously my public account is options trading, which, how is that going? I haven't looked on that one in a second. Not as good as it was this morning. I fumbled my Russell play. I completely fucked that up. I got too confused on NQ and I forgot I was supposed to manage this at market open. And then by the time I saw it, it went against me. And now I'm just fucking going for a weird ass YOLO. Let's say, okay, reminder. Let me check the DMs right now because I don't think it's happened yet. Okay, no, there's still spots open. If you haven't already, Apex 70% off with that code Goonie. But what's exciting about it is the upgrade from eval to performance is only $40. This is the cheapest that they've ever run it, and tied together those two costs make it equal to like the best deal. It's not necessarily better than the best deal, but historically it is tied with it. But I have some extra coupon codes that I bought from my affiliate manager, and the first 5 people who send me proof that they bought an account today with this code for this deal that will be ending in an hour and 15 minutes, I will be giving you the coupon code for another account. So it's better than 70% off. So like I said, I only have 5 coupons. I'm going to look at the timestamp of everyone sending me their photos. And like I said, there's still spots. Not 5 of you have not purchased it yet, not in total 5. So you still have a shot at this. And I just wanted to let you know that it's a nice deal because 70% off with that code Goonie. If you pass the test, it's only a $40 upgrade fee. And on top of it, if you're one of the first 5, you're going to be getting another eval. So that makes it even cheaper, obviously. Even cheaper. Fuck. All right. We're dipping, but how much? It's almost as if the market is trying to decide. We took a big hit, went up, pulled back roughly 50%, and now everyone's like awkwardly looking around thinking, which way do we want to go? This pump, 50% pullback, is it almost like perfectly 50%? Pretty much. Yeah, we're like at the 50%. Yeah, it's a 50% pullback, and now everyone's awkwardly looking around. Do we want to make this a higher low and bounce off of it? Or did we rip and we're actually just going to vomit to the intraday low? Awkward moment. Here's a look at the Mag 7. Just hit the low of the day, showing a little tiny bit of life, but once again, the low of the day. S&P 500, same thing, low of the day, showing a little bit, a tiny bit of life. Looks like we're getting rejected at the 50 EMA right here. If this barrels through, I'm obviously going to move my stop then to this high. But that's obviously a big if. And right now, I'm not necessarily saying this is my profit target. I just threw it up there because it's the intraday low, which would be a nice natural target if we get some sort of giant vomit. But my break even on the day is 40. So my real goal here is on a vomit below 40. Ideally, on this test of 6,700, I move my stop to 40. So the worst case situation is I'm break even on the day. That is like, that's my big mastermind plan right now. Not necessarily just holding on all the way to this level. If that hits, that's sick. But what I'm looking for is a nice vomit, which is not happening. We just keep tying these levels. But once again, on that, like, there are strategies out there that wait for a movement, wait for the 50% retracement, and then they go in that same direction. So we pushed up, 50% retracement, they go long, and they keep pushing it higher. That's kind of a well-known strategy, actually. Let me update this. I'm waiting for these breakdowns. And most importantly, where are we battling it out right now? 6,800. So not only is it this like retracement that a lot of people trade, we're just at this massive technical, psychological, and options level, this gamma level, 6,800. So why are we dancing around here? Well, just because the market's trying to decide what the fuck way it wants to go. I'm hoping it breaks down because that is the direction of my current play. But in reality, I'm going to be honest and tell you I have a 50-50 shot. Buyers could step in, rip it up, get this actual upside gap fill, or we end up, because remember, calls were not stepping in, and now people bought puts again. Actually, that's not good. Starting at 1041, people bought puts and sold calls, dropping the delta like no other. That is bearish. Now, because we're at a key level, they might decide to, I don't know, behave a bit better from here, but let's see. And what I can tell you is right here, 10-point region, 800 to 810, 810 to 820. If this doesn't hold, we're back down to 770. I'll just double check that sanity. Hang on. Let me clean this up a little bit. Yeah, 70 is the next level. So things could start to speed up from here. And once again, this is an if-then statement. If this does not hold, then my target is basically the intraday low. There's just not big players anywhere in between. So if this doesn't hold and you're more of a swing player, I mean, I suppose you could either risk 820 or 810, but that is your next target. And I'm just right here. That's the next positive gamma node. And then past that, this is a new position, 740. That was not there this morning. Okay, so I'm just going to shift this down. It's not 750. Psychological people might react to it, but really the next level past this, once again, a position created since market open is down here at 40. So mark that out. If you are a bear, if we fail at 800, target 1 is 770, target 2 is 740, your reach target is 715. If you are a bull, you're looking for a recapture of 800, 810, positive level. It's important intraday. The upside gap fill at 820.62, and then your reach is 35. That's the latter's the bull case, the former's the bear case. Play it accordingly. If I had to give someone an edge here, 5-minute and 10-minute are bullish, 30-minute and 4-hour are bearish. 5-minute is potentially breaking down, 10-minute is potentially breaking down, 30-minute and 4-hour are bearish. Flow is bearish, but a little bit of life right there. Flow is bearish with a little bit of life. I would say the slight edge goes to the bears, but not overwhelming because we're just at a key level. And everything we know about key levels is it just means you have to pay attention. There's no model I know of that is quality at predicting a bounce or a breakdown. It's more of, hey, we're at a key level, pay the fuck attention. Vol's not as high as I would expect it to be for a vomit. Maybe it's a little bit slow to react here, but all I could tell you is we're just at a key level. And that's what anyone who's being honest and knows what they're talking about, all they would point out is, hey, just wait. We're either breaking above or we're breaking below, and maybe you're going to get lucky. Maybe you're not going to get lucky. I'm hoping I get lucky. This is my break-even level, digging myself out of a hole today. Only 10 points to go right here. I was down 2.4K. I now have a locked-in loss of 1.4 at worst, but I have unrealized gain of 1,200, so I'm almost back to break-even. My break-even is roughly 40. Wouldn't mind 40, 25, 500. So if I move my stop to this recent high, my worst case situation is a loss of 500 on the day. And for accounts that are up about 14,000. That's completely acceptable. Completely acceptable. The Bears, you probably discussed this. I got caught like, what constitutes a crash? Technically, a crash is 20% from the all-time highs. There is a term of art, I believe is the saying, but a crash does have a mathematical definition, 20% from the all-time high. Or no, that's a bear market? You have a pullback is 10%. Crash is 20%, or is a bear market 20%? There's a definition at a 10% pullback and a 20% pullback. A bear market is 20%. A pullback is 10%. A crash is more probably of an emotional thing. Yeah, that's right. Bear market is 20% from the high. Pullback is 10%. Crash is more a news emotional like that. Bear is 10. No, it's not. Luke, do you just make shit up? Saucepan, check DMs, Matt. I sent the photos. I'll be checking all DMs right after this. Right after today's show. Right after. A correction. Okay, aka pullback 10%, bear market 20%. So a crash, yeah, a crash is a little bit more of like an emotional phenomena. I was almost to break even. I was within 2 points. Imagine if I had my order there, I'd be so pissed off. Even in the times that I might just put in orders, the market is always teasing me. It's always picking on me. It's always picking on me. Oh. All right. I'm moving it more in the money. All right. I'm short at 810. My stop's at 91. I kind of just want to keep moving it 10 points, but I kind of just want to keep trailing it. The Russell, everything's right at its shelf. The SPY could break here. The Russell could break here. The Qs are the weakest, actually. Speaking of that, on my one random account, I have a position. How is that? Oh, I'm green. Wow, that's rare for me. All right. All right, if you guys had, we just hit my break-even line. If you guys had a vote right now, based on everything you know about the market, we're currently trading at 750. What do you think is going to hit first? My stop at 91 or my fill at 670? Once again, we are trading at 750. Do you think the market is more likely to go up 40 points and knock me out, or more likely to go down 80 points and get me my fill? So that's 2-1. The distance I have to go for profit is 2 times. But which one? But we're also heading that way. So do you think it's more likely or not? 80 points to the downside? Is that proper math? 70 points to the downside from there? I guess we're at 50, so 80 points from this moment. Or do you think 30 points to the upside? Stop, down to fill, stop, filler up, 6-7, stop out and dump 500 points. I think it'll hit your stop sideways. Well, I hope not sideways. Well, I'd prefer sideways rather than my stop, but we'll see. Obviously, when we're talking about more than 2x the distance to the downside, clearly that becomes less likely than the thing that is closer, just because that's how prices work. But I am with trend. My stop is on this side of VWAP. If it's targeting VWAP, I'm fucked. It hit my break even. Damn, I need this to get rejected right here at this EMA. It feels like it's coming for me. How low did we get? I think the market is just Yep. 800. It's just the battle of 800. That's all this is. We almost broke. Look at this. We got to 97, 97, 96, 97, 97, 97. It keeps trying to dip. Nope. Buyer step in. This is the pivot level, folks. This is the all important pivot level. Do I think it's going to get rejected right here? What time is it? It's 11:30. Wow, we are way over on the show today. Not the worst short. If this fails, if this pump fails, do I want to short again? Because then I could play one to here, and then that's helping me out even more. I'm tempted. I'm tempted. I'm tempted. I'm tempted. Right there. It's picking up a little bit. I am tempted. Whoa, what was that flush? We went all the way up. Is this going to fail? If I do it, it's half size. I'm not taking any size on this one. Haven't done anything yet because I'm trying to wonder if, well, I'm thinking, is this just a higher low? It is a higher low. The question is it going to hold? The question is it going to hold? The risk reward's not bad. 8 points of risk. What's the... Oh, maybe bottoming here. Mag 7 picking up a little bit. This is the question of, does it bounce off of 800? We try to recover. Guess it's good that I didn't front run that one. In fact, it's coming to knock me out. So after all this pushing on 800, it is attempting to save itself. Mag 7, not that much. Price is better. Oh, S&P 500 showing a little bit of life right there on that pump. I wouldn't mind 57. Ugh, that's a little bit more. 23 points. That's another $500. Maybe 64 and then pray. Save yourself 7 points. Is this a fake out? Oh, how can I take advantage of it with the most minimal risk? This kind of looks like what we just had. All right. I threw on another one for the second trade. Let's think about these trades independently. For that new trade, I literally am risking that high, this little trend line breakdown, and I'm targeting this recent low. If I hit it, that's a nice... Honestly, where did I get the fill? I got the fill at 64. So if that hits it, that's 24 points of profit. I'm literally just targeting this recent low. This little pink marker is where I got in. So the first trade, that risk is still there. I haven't moved it. This new one is, once again, the new trade. Basically, I'm playing the overshoot of the EMA cloud, then that gets rejected. Maybe it happens, maybe it doesn't. We're on the right side of VWAP. And really what I'm looking at is this failure here at 800. I don't like, it's a 50-50 shot, so it's a game of risk versus reward. Bag 7. Okay, I would say it's a 60-40 shot. My fill on the second one was at 64. So I would actually love for that one to be the freebie trade. Because right now I'm taking on a little bit more risk than I would like for that bullshit trade. But hey, it is what it is. If we take out 52, 50 right here, people, not the craziest thing. Oh, hang on. Where's this point of control? The point of control is at 75. Point of control is at 75. You have some buyers at 55. Okay. How do I want to handle that? So I'm trading both of these trades as two separate trades. That's 89. Do I want to move both to 90? That's a nice level. But if they hit that, they might be running to VWAP anyway, so I could probably save myself 10 points. So maybe I should be a bit more aggressive with it because like just the likelihood, if we hit this, good chance of going there anyway. So I could just save myself some points and then okay. So I'm still not losing money. Based on my average fill, my stops are on the grid. I want to be very, very clear. In this moment, in this setup, I don't think it's appropriate for me to like risk going deeper into the red. I kind of want to keep it capped at where it is because I've already cut that loss in half. So my stops are on the positive side of where my current fill is. And fuck, this is a higher low. Maybe I'll get lucky. Do I just want to hit this close button? I'll give it a chance because 75 is the point of control. I'll give it like a quick little, see how people are trying to sell right here. You could see this little heat map. Fuck. But it is filling it up pretty nicely. Shit. I basically need this POC, this yellow line, point of control. That's where the most volume has been traded today to get rejected, and it doesn't look like it's happening. Oh, maybe a little bit of an overshoot, right back down to it. I consider this maybe not as important as VWAP, but in that league of, hey, yeah, maybe pay attention to it. VWAP's a bit higher, and I feel like if this goes, they're going to want to retest VWAP. Oh, do I just want to close it and take this money? It might close it out on me. Am I going to get lucky? I never get lucky like this. It never comes up this close and turns for me. And I get it because too many people are betting on VWAP. Yeah, all right. Well, I protected it. I protected it. Yeah, we're starting to swing to the upside. I don't know if this is a full save of 800. Maybe we go to 810 and bomb it. But at least that gives me the ability to fight later this afternoon if there is an opportunity. But Vol's starting to take a hit, so I really don't mind that break even at all. Right here, Vol's starting to take a hit. So I gave myself a shot. I gave myself a fighting chance. It just happened to not be the exact trade that I was looking for. So I'm going to keep watching this because on a breakdown, obviously Vol will expand. The ranges could get crazy and I can easily, oh, fuck. That's funny. Someone commented and now a 500-point drop. Look at that. It knocks me out and then actually comes right back to where I was anyway. Like, come on, dude. Just so unfortunate. But sometimes that is trading, and all I have to remind myself is don't let it get me tilted. Don't let it get me tilted. So at this point, not only on SPX should you be watching 6,800 flat, but now it becomes the game of VWAP right here at 800. So on SPX, 6,800. On NQ, 25,800. That is we do have new higher highs and higher lows. So we had this clear downtrend, potential reversal, watch 800, obviously watch the extreme at 823. But this is exactly why I protect myself, because now that new position would be in the red. And who knows, maybe it turns right here and I would have been fine. Or maybe on the flip side, it just keeps going. You don't know. You just don't know. So that's why, because you don't know the next bar, especially because there's no pattern day trading in the world of futures, use your break-even stops out. Like, that's a tool for you. And if you could just always protect it, great. 803. Yeah, I'll be watching these. I'm watching 803. I'm watching 801. This little pop. As long as we don't exceed this 11 a.m. high, if we start to fail from here, but that's going to look like vol popping. Everything's catching a little bit of a bid. This might just be this midday chop bullshit because we're right at a key level. Yeah, worthwhile to pay attention to, but obviously things are slowing down. So, all right, folks, if you haven't already, check out the Apex. I don't know if there's any more spots open, but like I said, you could sign up for it regardless. And if you're one of the first 5, I'm going to be giving you an additional eval account for free. So check that out. If you buy with the code Cooney, screenshot it, send it to me on, obviously the easiest is going to be Twitter. I'm going to look at the timestamps, and the first 5 people who do it, I will be sending you a code today. Fuck, dude. Really? This is now when it decides to completely fucking vomit? Oh, dude, I'm torn. Fuck, dude. Really? It went up to 95, which means even my first stop would have been hit. Wow. That's brutal. All these poor people playing for VWAP missed it by 5 points, 4 points. Dude. Not an easy day. Not an easy day by any means. So we try to bounce up. Here's the recovery. This is actually setting up to be one of my favorite plays. If this recovery bar fails, you can risk. We attempted to recover. Here's the attempted recovery. How much will it go? No matter what they say, size is important. Wow, that's quite the bounce there. This bar is going to become interesting, this 2-bar setup. If this bar starts to fail, because right here we had this upward sloping trend line, we had the higher highs, higher lows. We just took out some lows, but not all the lows. Watch this, and it still might do the VWAP touch and vomit. Watch the failure of 60 here, because then that brings us from the succession of lower highs and lower lows bearish to a new trend, higher highs and higher lows bullish. If this fails here, then we have back to lower highs and lower lows with like the larger trend of the like 30-minute chart, 10-minute chart. So I would very closely be watching this. But anyway, I'm going to go hang out in the Discord. Like I said, check out Apex. Use that code Goonie. If you're one of the first 5, I'll be giving you a free account. We'll be posting an update video later on today and then streaming once again tomorrow morning. The name of the game today is Keep Your Risk in Control, which is the name of the game every single day. But I just think it's a worthwhile reminder to keep it in the forefront of your mind, because that's how you survive this. That is 100% how you survive this. So that's what I have for you now. I hope you're crushing today. And if you're not, I hope you end up crushing it this afternoon. I'll catch you in the update video. I'll catch you in the Goonie Trading Discord, and I'll catch you in the stream tomorrow morning. I appreciate all the good vibes. Peace.